There we go. All right. See, it's the little things that make me happy. Got it. All right. And now we can view the presentation. Okay. All right, cool. So, some of you guys know my story. Some of you guys may not, but I'm just going to assume that you guys do not. Me and my husband, we actually purchased our first property in 2013. We had just turned 25. We had purchased our first property. And that was the very first time that we actually got like a little whiff of, what it was like to have some sort of like ownership. And so we had that property for a little while before we ended up selling it. And when we sold it, we ended up making like $50,000 off that property. And being so young, first of all, we were clueless of what to do with the money. We didn't know how to scale. We knew that we wanted to purchase more real estate, but at the time we just didn't know how. So we ended up actually just blowing that money, staying in our corporate jobs. I was a full-time accountant working for the school districts, and my husband was a full-time CDL truck driver. And so I was the director of accounting for my school district. So I had staff that I had to manage. But being young, one, and being Black, there were a lot of people, especially like my subordinates, that they didn't respect me. I remember a very particular incident where myself, the purchasing director, and one of my staff accountants, we were all in my office, and I have my accounts payable team sitting outside in cubicles. And we're sitting there having a conversation, and all of a sudden, one of my accounts payable clerks gets up, grabs my door to my office, and slams it shut. Like literally, the whole office shook. And I'm looking around and I'm looking at the other two people in front of me, and they're like, what the heck is up with her? I said, I don't know, but she's getting written up. Like, I don't know what's going on. When I finally sat down with her and I asked her, Julie, what you did was extremely uncalled for. She said that because we have offices and because they have cubicles, it was inconsiderate of us to be speaking so loudly while they were out there working in their cubes. And so she decided to just come and slam my door. And I said, Julie, I said, there is a way. You could have came and said, hey, Tilisa, is it okay if I shut your door? There's other ways, right? So you could imagine having to deal with this sort of thing on a continuous basis, even though I'm making six figures and I am in one of the top executive positions in my role. I am not happy. I don't like being there. The people are not respectful. And so when during the pandemic, everybody was able to work from home. So during that time, that's when I finally felt like some sense of like freedom. I was able to work out during different parts of the day. I was able to hang out with my kids. I found out that my daughter was being bullied and that she was cutting herself. So like so many things I was missing being in my corporate job, like some of you guys were saying, that I knew that I needed to escape that, but I felt like as long as I can work from home, I can make it work, right? Well, then they said, hey, everybody, it's time to come back to work. Everybody got to come back. And so it was hard for me, y'all. It was really, really difficult for me to go back. And when I went back, it was not the same. I didn't like going there before, but now when I would pull up, I would be sitting in the parking lot with my stomach in knots. Like I just can't. I would go in there, I would get my work done, and I would literally be sitting there scrolling and looking at properties and scrolling and looking at how to wholesale. And so I had consumed so much information on YouTube and all that, that one day I convinced my husband, I said, babe, if we sell our house and we quit our jobs and we pull all of our money out of our 401k, we can invest it in real estate and we'll be millionaires in a year. And my husband, my dear husband, he's so sweet, y'all. He has so much faith in his wife, right? He's like, I believe in you. I trust in you. We're going to go with the plan. We didn't even have a plan, y'all. What? That wasn't no plan. So I remember the day I went into my CFO's office, it was actually during my annual evaluation. And my CFO said after she was done with my evaluation, it was obviously raving because I was an amazing director of accounting. And she goes, "So Tilisa, what goals do you have for your team this year? I'm excited to know." And I said, "You know what? Actually, I don't have any goals. I didn't bring any." And I'm like looking at her smiling, and she's like looking at me with this confused face. And I was like, "Yeah, you know what, actually," and I pulled out my letter of resignation. I said, "I'm actually going to be quitting. Here's my 30-day notice." She was completely shocked. It was totally unexpected. And she says, "So where are you going? Are you going to another school district? What are you doing?" You guys, at the time, I was so embarrassed to say, like, we're selling our house, we're going to liquidate our retirements, and we're just going to go out on faith and hope that this real estate thing works. So I didn't say that. I was just like, me and my husband made some really great investments to where we just don't have to work anymore. So he's right. And so everybody at work is just like, Talisa's like doing something in real estate and they've got like these investments and whatnot, but nobody really knew what I was doing. And so we start this wholesale business, and this is where things start to get kind of rocky. Remember, I sold my house. We pulled our money out of our 401k. We took all the money out of our savings account, and we started a wholesale business, a virtual wholesale business. And all the gurus, everybody tells you that you can get into real estate wholesaling with none of your own money. And that's exactly how we went into it. You can get into wholesaling with none of your own money. Why they didn't tell me that I had to pay for leads? Why didn't you tell me that I have to skip trace these leads and find people's phone numbers? If I'm really going to do this at scale, I've got to hire some VAs. So now we've got staff on payroll that we're paying. We've got systems, all these different batch leads and prop stream and all these different systems that we're paying for, right? What we didn't realize was that starting a wholesale business, it did cost money, and it cost a lot of money. And when you're starting off in wholesaling, you're not closing deals every single day or even every single month. You might close a wholesale deal one month, you might not close a deal the next month. So how that looked in our family was that we were bringing in maybe $10,000-$15,000 in wholesale money, but then we're forking out money to pay the business, to keep the business going. But then we're also having to live off this money as well. And so there was just no way that we were going to be able to keep this up. So it got to a point where we had to max out our credit cards to keep the business going. We had to max out our lines of credit to keep the business going, until finally we didn't have any more money. I looked into my bank account. We were negative $20. Negative $20. And I have a business and I have people on payroll, and I don't even know how I'm going to feed my kids. Like, for me, this is rock bottom, because ever since my kids were young, I mean, me and my husband got together in 8th grade. We've been together since then. Right after high school, we got pregnant sophomore year. Right after high school, I went and got my bachelor's degree. Right after my bachelor's degree, I went and got my MBA. And so I have literally been on this trajectory of trying to like better myself so that my kids don't have to experience a family living in poverty. So we've always lived in very affluent neighborhoods. My kids' first house was a house that we built from the ground up. So to be sitting here in a rental property, broke, not knowing how we're going to feed the kids, this was rock bottom. And my husband was having to Uber and Lyft just so that we can bring food to the table. It was just like we had to file for bankruptcy. Our credit score dropped 200 points. So we went from like a 700 credit score all the way down to a 500. You guys, this was only within a matter of 6 to 8 months, right? Literally life-changing. And so when we talk about raising private money, I had to learn how to raise private money. I didn't have a choice. It was either I was going to learn how to raise private money, I was going to have to go back and get another accounting job because this real estate thing just wasn't working. And so when I decided that I was not going to give up, and I started to look at alternative ways of getting my deals funded, I found out about something called private money, and that's what we're going to talk about today. So once my wholesale business started to kind of flop, after that, I've decided I only want to buy real estate and hold it because I need to build up my cash flow. I don't ever want to be in a position where I don't have monthly income coming in that's guaranteed, right? I don't want to do this whole wholesale thing and I get 10,000 or 5,000 and then I got to wait another 2 months to close the deal. I don't want to do that anymore. I don't like the way that it feels in my stomach not to have that reassurance that I'm going to get paid every month. So that's when I said, okay, from here on out, I know how to wholesale. I know how to find these deals. Me personally, I was finding creative deals. That's my thing. I wasn't just finding wholesale deals for cash. I was very specific in finding creative deals. So I already knew how to find them, right? I already knew how to underwrite them. And I'm over here calling buyers to see if they want them. The entry fees are like $50,000. So they're like jumping on it, like, yeah, I'll take it. And I'm like, man, I want to hold on to some of these my darn self, right? And so when I learned about private money, I said, wait a second. So all you got to do is find somebody that's got money sitting in a bank or in an IRA or whatever, and tell them that you've got a deal that can give them some really nice returns, and they'll fund it. So I don't have to worry about my credit. I don't have to worry about me not having any money. And so the only thing that I had to worry about was what Tiffany was talking about, my confidence. That was the thing, because I had everything else, right? And so one day I had came across this really amazing deal, and it was a multifamily in Florida. It was a creative finance deal. The seller had a mortgage on it, so he wanted us to take over the mortgage in place, and then he wanted about $200,000 in equity. So with that additional equity, we did a seller finance note. Of that note, and remind you that the mortgage that we took over, the interest rate on that was like 3%. So killer interest rate. The seller finance note for 200,000, because the property was 600 grand. That he only wanted $50,000 down. He gave us 0% interest with a 30-year amortization. My monthly payment to the seller is like $488 a month, right? The mortgage is about $2,300. And so in order to get into this deal, I needed the $50,000 to pay the seller. Two, I needed my closing costs, which I always estimate, and I told Vanessa and Keith this, I always estimate 6% for closing cost of whatever your purchase price is. So if you're purchasing it for $200,000, multiply that by 6%, and that should be your estimated closing cost. Sometimes that number is a little high, but that's good because you want to be conservative. You'd rather have more money raised than less money. And so I had this deal, right? And we had the EMD in, but we did not have all the funds that we needed to raise. We needed the $50,000, we needed closing costs. We wanted to renovate a couple of the units so that we could increase the rents, some of those things. So in total, we needed like $100,000. And so one day, it was about 2 weeks before we were about to close. And so I was starting to get really anxious. And I was in Dallas, and I was flying here to Virginia. And while I was in the airport, I told myself, I said, Tilisa, while you're sitting here in this airport, you are going to talk to somebody, a complete stranger, and tell them about this deal. See if you can try to raise this money. And so, y'all, I'm sitting there, right? I'm sitting there, the airport is big. It's a lot of people moving around and whatnot. And so I look at somebody who I want to talk to, and they kind of look a little irritated, and people got their mask on. So I don't know if they really want you to say nothing. So I was just like, I got nervous. I sat down. I didn't do it. I said, I can't do it. And so I said, okay, so y'all, I had about 2 hours until my flight took off. So I was like, okay, I got 2 hours to talk to somebody. The entire 2 hours went by, y'all. I didn't talk to not a damn person. I was so nervous, right? And so finally, they say it's time to board the flight. And at this point, I'm feeling pretty defeated. And I say to myself, okay, you know, I was actually one of the last to board. I was like in the group 6 or whatever, right? So I said, okay, Tilisa, all right, you need to muster up the courage. You need to muster up the courage because this is it. You're about to be on this plane for 3 hours. You've got to find somebody to talk to while you're sitting on this plane. And so I said, I need some encouragement. So I get my AirPods, put my AirPods on, and I turn on this podcast. I don't know if you guys know Ash Cash, the Volt. Anyway, so I listened to him, and y'all know who that is, Ash Cash? Okay. So I put my earpods in, and just the part that I was listening to, the guy had said, God will give you these windows of opportunity. And we can either choose to enter that window and watch our life grow exceedingly and abundantly, or we can choose to not go through that window of opportunity. And that opportunity will come up again, but it might be another 3 to 5 years, right? And so I was like, I ain't got time to wait another 3 to 5 years. Like, I need to get this done like today, right? So it gave me the motivation that I needed. Okay, so I'm going to get to my point here in a minute, and I'm going to start teaching y'all. So I get on the airplane, and I'm walking, and you know how you kind of have to look up at the top to try to find your seat, right? So I'm looking up at the top, not really paying attention to who's sitting down. And finally, I get to my number, and I look down, and there's these 2 very large white men sitting in the seat. There's one really large white guy sitting by the window, and then there's somebody else sitting on the aisle. And so I was like, okay, I got to squeeze my little tiny self in between these 2 men. That'll be awkward, but okay. And so I was like, hi, excuse me, I think this is my seat. And then one of the guys says, oh yeah, come on in. We don't bite. Rawr. Get a little, I said, okay. Nope, not doing that today, sir. We're not doing that. So anyways, you guys, I sit down. I'm gonna make this story short. I sit down, and the guy to my right, the one who's sitting by the aisle seat, he and I just start having friendly conversation, right? And through this conversation, I find out that him and his wife have also been together since they were in 8th grade. This guy's like 70, so he's got some time on me. But him and his wife have also been together since he was in 8th grade. They've got 2 kids, just like me and my husband, a boy and a girl. We have the exact same dog, a little Labradoodle. It was like crazy, but this is an older white man, and here I am, this young Black girl, and we're like vibing, and we've got so much in common. And he tells me that he's an engineer, and he tells me that he built fiber optic cables that are sitting on Mars. He's got fiber optic cables that are sitting down at the Titanic at the bottom of the ocean, like brilliant man. Goodness. And then he says something. He says, similar to Keith and Vanessa's situation, he says, and you know what? I also do fix and flips, but I'm getting to the point where I'm so old in my age that I'd really like to find more passive ways to invest my money. I was like, oh, this it, God. Oh, this the window. This the window that you was talking about. Okay. Yes. So I was like, really? That is so interesting because I'm a real estate investor. I purchased multifamily real estate, and I've actually got a deal right now that's offering these sort of returns. And this is how much we're looking for. Do you guys know that by the end of that 3-hour flight, he said, Tilisa, I really enjoyed talking to you. He said, I've got $200,000 sitting in a 401k, and I'd like to use that to invest with you. Oh, that was the very first time that I raised my first $100,000. And I raised that from this man, John. John, he's the sweetest. John and I have become really great friends. John has become a mentor to me. He is extremely wise. I go to him when I've got issues with my kids and I need to know, how did you deal with this part of teenagers? And it's really formed into a different kind of relationship that I did not expect. But the coolest thing about this is that not only did I win and I get to purchase my quadplex with zero of my own money, this property brings in $6,800 a month, and John's distributions are $1,500 a month in passive income, right? So this is the power of private money. And I want you guys to understand that when you are talking about your deals to people, you're not asking them for money. I didn't ask John for money. I told John, I have an opportunity for you to make double-digit returns. That's what I said. That right there is completely different than saying, hey, I'm trying to buy this real estate project and I could really use, another $100,000 and, I can probably give you 12%. Like that sounds so uncertain, right? So I want you guys to take that first lesson is when you're approaching people, never approach them with a lack mentality. That's what that is. That's a lack mentality. You go to them with an abundance mentality and you tell them what you can offer them, what your offering is. And what I like to tell people is I say, I allow my people to come and invest in my deals. I don't ask people, I allow them. Allowing them means that I'm not going to accept just anybody's money. So people are going to line up to me saying, hey, take my money, take my money, take my money, because I'm positioning myself in a position of authority. And I'm telling you that I may not allow you to invest with me. I may not want your money, depending on your personality, depending on your integrity, all of those things. I don't need it. And I want you guys to have that same mentality. Going into it with that mentality will easily take away that lack mentality. Okay. All right. So why did John offer to fund my deal? Why did he offer to fund my deal? There's a few reasons why. So John knew a couple of things. If he allowed his money to sit and stay sitting in his 401k, that money was not going to grow, right? Because, and I don't know if you guys know this, but 401ks, this is one of the only investments that you don't get a profit and loss statement for. So you don't get to see all the expenses that come out of the contributions that you're making to your 401k. And what I found out was that they charge you fees. So when you think that you're about to retire at 65 and you think that you're going to have all this money, a lot of people, and I think it was like actually the statistics said 78% of people who think that they're going to retire at 65 actually don't. And they end up having to take a part-time job because they don't have enough money in their 401k. Why? Because the traditional custodians like Fidelity, Vanguard, Merrill Lynch, all of them, they take fees for, like, if any of you guys are football fans or you guys like the Super Bowl, if y'all have ever seen those big, nice Super Bowl commercials that Fidelity puts out on the Super Bowl, yeah, those fees, that's their commercial fund. That comes out of your 401k. Like, they don't tell you that you're paying for their commercials and whatnot. And so John understood that if his money stayed in the 401k, it wasn't going to grow, it was actually going to lose money. But what I find out is that people all over, like, as soon as you walk out your door, even your Uber driver, people have sitting pots of money collecting dust that they just don't know what to do with. You have people just have money sitting in their bank account. And in my world, like growing up, we didn't have, like, I didn't know very many people that just had cash sitting in the bank. Like, you live from paycheck to paycheck. When your parents got paid, y'all paid all the bills, y'all went grocery shopping. And after that, don't ask for nothing because we wasn't gonna have no more money until 2 weeks later. So the idea that people just have money sitting in the bank and they don't know what to do with it, that was foreign to me. And that's probably foreign to some of you guys, or at least maybe it was before you found out about raising private money. And so people have money just sitting and collecting dust in their banks. Also, the stock market. Stocks are great. I'm not going to lie. I've made money in the stock market. I've lost money in the stock market. But one thing that I don't get when I buy a stock is I don't get a deed of trust the same way that I would if I was lending my money out on a deal. I don't get a promissory note. I don't get added to the builder's insurance so that if anything hits the fan, the insurance company is going to pay me. You don't get any of that with a stock. If the stock goes down, you lose your money. That's it. So people will take their money out of their stocks and they will liquidate it so that they can become an investor, a private money lender with you. but you need to know how to educate them. You need to educate yourself on these different pots of money. So that way, let me go back. So that way, when you encounter somebody who has one of these situations, you can know what to tell them. So like, for instance, if a HELOC, I don't know how many people have properties, personal properties, and they've never taken out a home equity line of credit. People will take that HELOC from their personal property, and let's say that the bank is going to charge them 5 to 6% interest, okay, on that money that they borrow. Even if they took that money out of their house and they invest it with you, and you're going to pay them 10 to 12% annualized interest, the 6% interest that they're having to pay on the loan that they borrowed is being covered by what you're paying them. So they're able to pay that interest, and they're still making a profit off money that would have just been sitting in their house. So you can imagine there's a lot of people that have private money who don't even know that they're private money lenders. And so like when I approach people, and I'll kind of tell you guys the script that I use here towards the end. But when I approach people, I don't approach them as if I'm like trying to get them to buy my deal or to fund my deal. I approach people and I say, yeah, the people that I work with, the private money lenders that I work with, they take, home equity lines of credit out of their house and they invest it with us. They take like 12% return so that they can pay, the interest on their HELOC, but then they still get to make money on their deal. Or yeah, I've got people who've had money just sitting in a 401k for the last 20 years, and it hasn't grown like even $500. And then they invest it with me and they're making $1,500 like my buddy John in the first month. And so when I talk to people about what I'm doing and about what I can offer, they pose the question. They say, well, how can I invest with you? Or, well, how can I do that? Or, well, what if I only have 10,000? Boom, you've got yourself a private money lender. They're hooked. Any questions so far?
I don't have a question, but I just wanted to share. So I work from home through the week, but I do go into the office one day a week. And so I was just sharing, like, I'm so tired to my coworkers, and they're like, well, what do you do when you go home? I said, I'm studying real estate. I'm not just watching TV. And one of my coworkers was like, oh, well, I got like 20,000 sitting. You think we can go to lunch one day? And you can tell me about it. And I was like, I'm gonna get back with you on that. So I just remember he said that.
You see, and Tiffany, that was like a perfect segue into this next section, which is who can be a private money lender? That was somebody at your job. And I'm going to ask you guys, you just gave me one, but who can be a private money lender? Where can you meet private money lenders at? You guys, like I said, it can be your Uber driver. Tiffany said it can be your coworker, alumni members, people that you went to college with. Y'all reach out to them. These people would be happy to know, what are you doing now? Reach out to them. You guys have something in common. And the easiest way to reach out to people who are in your alumni group is on LinkedIn. So like I went to the University of Laverne for my MBA. If I go to LinkedIn and I type in the University of Laverne alumni, there's going to be groups within LinkedIn. I'm just going to join those groups and then just start messaging people like, hey, I see that you went to Laverne too. Oh my God, we should connect. And then boom, y'all have a conversation, have a coffee date, have a virtual coffee date, and tell each other what you do. And I guarantee you'll get some private money lenders, or you'll get somebody who knows somebody who can be a private money lender for you. So in addition to that, new and old retirees. My private money lender that we just closed on a deal with last week, she lended $55,000. She was just retiring as a therapist. She'd been a therapist for the last 30 years. And she had 50 grand sitting in her bank account. She had another 50 grand sitting in her IRA. And she was like, Tilisa, I'm retiring and I'm scared. I'm scared because I don't need to live off all this money, but I need to figure out a way to grow it. And I said, girl, don't worry about it. I got you. So that $55,000, she's earning 12% annualized interest on it. So she's making $550 a month on that. So had she not met me, that money would still be sitting there and she wouldn't be bringing in any money. So you guys are literally like changing people's lives. You're not asking for money. That's like not what this is. Like, I'm making you money. What? You know what I mean? And so conferences, I've met people, like, matter of fact, the lady that I was just telling you about, Patricia, I met her at a conference. Local real estate meetups. You will not believe how many people at these local real estate meetups, even though you think that, oh, they're just there to wholesale, or they're just there to fix and flip or whatever. A lot of the times people are there for those things. If they're fix and flippers, whatever, they're trying to find contractors and stuff. But a lot of the times you'll find that some of these people are burnt out. And even though they're flipping or they have a flipping business, they would like to start investing more passively. So when you go to these local real estate meetups and it's free, tell people what you do. Oh, I raise capital for my deals and I give investors double-digit returns, or I give investors 10 to 12% returns, whatever you want to say. But start saying that you're going to become the go-to, right? You're going to become the go-to. People are going to start talking about, oh, hey, yeah, I had met Tiffany at this last real estate meetup, and she said that she raises money for her deal. She gives her investors 12% interest. Somebody's talking to somebody who's got $100,000 sitting in their account. They're going to make that connection. You guys, this happens all the time, every single day, multiple times a day. I get DMs, I get phone calls from, hey, so-and-so said that you were able to do this for them. Can I give you my money? I don't even have to like intentionally go out and try to find private money now. I do it because I love it, and I do it because you guys need to see how it's done, like as you're watching my content. But once you start, the momentum is going to start to where you're not having to do these things anymore. Get out there and do it yourself. So I want a couple of you guys to start sharing out. I put a few things on here like local meetups, social media is a big one. What are some other areas or locations, and what are some other people that you can approach that could be potential private money lenders? You guys can just kind of yell it out.
Well, I was telling you yesterday that I emailed some of the doctors. Nobody really got back to me, but one doctor did get back to me, and he was asking me questions, but I wasn't really sure on how to meet with him.
Okay. That's good. That's good. I'm gonna share with you what you can do once you've made contact with somebody, what you need to do as a next step, even if you don't have a deal. Okay. So that's good. So doctor's offices, yes. What else? What else? Who else can we approach?
We already mentioned family.
You could do people at church.
Yeah.
People at church.
Sometimes the church, the pastor doesn't want you to do that. Like, they give you a funny look when you're trying to.
Oh no, not in a big, like,
No.
I wouldn't say like, broadcast it like that. I'm just like a personal conversation.
Yeah, like we volunteer in our children's ministry, so that's opportunity to network with people. I did that. I networked with this lady who used to do real estate, and I was telling her, you got to get back in there, and telling her you don't even have to use your own, she was talking about she wants to get her money up. I said you can use other people's money. So, those are kind of things, like if you have events and stuff, if you're talking with people, they don't have to be a big broadcast. It's just whoever you're talking to, you can talk to them that way.
And actually, and that is true, because one of the very first private money conferences I went to was held by a guy named Jay Connor. He's been raising private money for years, but he said that one of his very first private money lenders who actually happened to have $1 million to invest was somebody at his church. This older gentleman is somebody that he used to sit behind in the pews every single Sunday, and never once did he even tell this older gentleman what he had done. And so finally one day they were talking after church, and the older gentleman asked him, he said, Jay, what do you do? And Jay told him, he said, yeah, I purchase real estate, and people that have money, and told him that. He says, you've been doing that this whole time? Man, brother, I've got $1 million. I've been trying to, what? At the church. Yeah. So yes, I can attest to what Vanessa and Keith are saying. That is very true.
Another way I feel is good is that shirt that I saw you have on your Instagram. Like, even if you like, I'm gonna try to make a shirt like that.
Yes,
like,
I saw that.
You just put the
Yes.
shirt on and somebody comes up to you.
I'm telling you guys,
what does the shirt
you
look
guys are
like?
gonna see. I'm about to have like a whole like line. It's gonna be shirts, hats, workout gear, all that say I can help you earn double-digit returns. Ask me how to help you raise double-digit returns.
I need that
So,
shirt.
I need that shirt.
Yes, I
yes,
need
you guys will have it. Because honestly, that right there, that is a big walking billboard. The moment that you're standing in Starbucks and somebody's behind you and they're waiting for their coffee, they're sitting there reading like,
and you know, people are nosy, so they'll sit there and read it.
they'll
Yeah,
sit there and read it,
exactly.
right? Exactly. So yes, that's a very good point. So you
Yeah.
guys, really, honestly, when it boils down to it, anybody and everybody who has money sitting and collecting dust is a potential private money lender. The moment that you walk out of your door, I approach everybody. Ask my husband. We went on a little date night downtown, had a few drinks. As we're walking downtown, we meet these 4 people, couples, and they're drunk out of their minds. And they're like, hey, where do we go to dance? Are you guys going clubbing? I'm like, oh no, we're about to go home. And we sat there and chatted with them for a minute. You guys, the private money pitch and me doing real estate, that is so much engraved in me that I talk about that so naturally that I don't even recognize that I do it. And so I'm sitting here with these drunk people talking about private money, talking about how they can earn double-digit returns. And one of the ladies there, she says, oh, well, I'm like a millionaire. And then the other 2 guys are like, yeah, you need to talk to her. She's a freaking millionaire. And I'm like, okay. And look, you guys, I'm acting casual. I'm like, well, look, I know that you guys are having a good time right now. Here's my info. Let me get your phone number and I'll reach out to you when everybody sobers up. And she says, how do you know I'm not sober? I can tell.
That's how.
But literally, you guys, walking downtown with my husband and there found another private money lender. Now, I will say this, because I say this a lot. Don't let everybody be your private money lender. Like, although those individuals wanted to lend, after I got to have a conversation with her, not sober, I just don't know if she has the level of integrity or the level of morals or, just some of those things that I would want in a private money lender. And so I just decided not to give her a call back. And yes, she's a millionaire and I think that that's great and she should do some amazing things with her money, but I've got to be at peace. Mm-hmm. So not all money is good money. Y'all don't need everybody's money. Okay.
Headache money.
Exactly.
Thank you. Say it louder for the people in the back. Headache money. Okay. Do never be so desperate that you will put down your own morals or what you value to take somebody's money for your deal. It's not that serious. It's really not. You will literally be in a relationship. Being in a relationship with a private money lender is kind of like being in a marriage, because like me and John we're riding this thing out. I brought him on as an equity partner. And so I'll show you guys here what that looks like in a minute. But John and I are in this thing until the wheels fall off. Either when we sell, which will probably be never, because we both want this for our kids. And so you've got to make sure that whether the person's going to be doing a 6-month deal with you, a 12-month deal with you, or a 10-year deal with you, you need to make sure that you can get along with this person. You want to make sure that they're a good person, that they're not going to be calling you up and saying, Tiffany, what's the status on that project? Why haven't you given us any update? Nah, bruh. Nah, we ain't doing that.
Yeah.
We're not doing it. So anybody can be a private money lender, but not everybody can be your private money lender. And remember that.
Yeah.
All righty.
I have a question.
Yes.
What if you are an equity partner, but then I die? How does that work?
So before you even get into the agreement, you're going to create an operating agreement. So this is the way that we purchase property. Any property that we purchase, we create its own LLC. Okay. So if I'm going to be bringing on a private money lender with an equity position, the operating agreement is going to say that her investments and ABC Lender Company LLC, they are owners of 1109 Riviera Beach Avenue or something, right? But within that operating agreement, you need to say exactly what you want to have to happen in the event that you die. So all of that stuff needs to be like squared away before you sign contracts. So that was a really, really good question. All right. So you guys, what can private money be used for? When I first heard about private money, I kind of thought it was similar to hard money in that, okay, well, I guess they'll cover 80% of the purchase price. And then I'm going to need to at least have money in my bank so that as I get the project renovated, I can show them my receipts and they can give me my money back. So I was just under the impression that I wasn't going to be able to get all the money for my deals. And that was absolutely wrong. With private money, you guys, you can use it for anything and everything. If you're doing a fix and flip, you can use it for your acquisition cost. You can use it for your rehab cost, your closing cost, your holding cost, and your reserves. And what I mean by your reserves, and I told Keith this, anytime I'm going to be raising money, I always raise a little bit more than what I know that I need. And why do I do that? A couple of reasons. One of the very first issues that we had to deal with when we bought that quadplex was rats in one of the units chewing up all the wires. The previous landlord they had been complaining, the tenants had been complaining. He didn't do anything. He didn't have money or reserves to pay for additional stuff. So he just decided not to, right? Because he could have just had the property manager just take it out of the rents, but he decided not to. So anyways, we were dealing with stuff like that.
I'm sorry, Tilisa, was the quadplex, was it vacant at the time when you bought it? Okay.
No, it was fully occupied. And that's the way, yes.
So when you bought it and you had to renovate, how did you move the tenants around?
Yes. So the way that we did it, all of our tenants were on a month to month. And so we did a couple of things and our property manager helped us to come up with this strategy. So once we got the property, 30 days after, we sent out a notice to all the tenants to say, because they hadn't done a rent raise in forever. So we were due for a rent raise, even though we hadn't renovated it yet. So we sent out a notice saying, hey, everybody, rents are going to be increasing to this amount in the next, how many days or whatever. So you can either accept the new rent amount or you can basically vacate the premise, right? Certain people decided to stay, certain people decided to move. That's exactly what we wanted, because the individuals that decided to move, we were able to go into those units and get those renovated. And within 30 days, we were able to get a new tenant in there. And when we bought the property, we were getting $1,500 a month for each of the units. By the time we were done renovating that first unit, that unit we rented for $2,000. And so that's what we've been doing. So we actually still have one more unit to renovate on that one because they haven't moved out yet. But as soon as they do, we'll renovate that one and then we'll be getting full market rents. And so that's the way that I like to do it, you guys. I like to buy properties, and some people will tell you to buy them vacant. Because I am a multifamily investor, occupancy rates are probably the highest of my priority or vacancies, right? So if I'm going to go into a deal and I've got a private money lender, I need for that deal to automatically be cash flowing, because some of my lenders may want their interest payments to start beginning, right after we close. And so I don't want a property where I don't have any income coming in. And so I'd rather get it while it's already while it's already rented out, and then renovate them as we go, and then slowly but surely increase those rents. But you can raise additional. So my whole point in saying that was that you can raise additional reserves for anything. So if you need $200,000 for the acquisition, for the rehab, the closing, and you still need maybe 10 to 15,000 that you want to save for reserve, then you can raise 215,000. But understand that you need to make sure that you've got enough money, or that your deal is making enough money to where you can actually pay the interest on whatever it is that you're borrowing. Okay. So you don't want to borrow more than what you're actually able to pay back. So that's for fix and flips. You can use it for buy and hold, same thing. I know right now the pad splits and like the renting each room, that's becoming really popular now. And so you can raise the money for that furniture. All the furniture that you need to get that thing going, you can raise that. And one of the cool things that I'll say that I do like about pad split versus like Airbnb is that your furniture expense is so much less, because with the pad split, all you're required to provide is a bed, a mattress, I think a dresser, and a lamp.
Yep, that's it.
Yeah. Okay. All right. And so, in all the other spaces, the living room, the dining room, all of those get converted into bedrooms. So you're not having to buy living room furniture. You're not having to buy dining room furniture. So it's really the most cost-effective way to get into a midterm rental, without having to have the astronomical expense of furniture. So I think that's pretty cool.
Tilisa, interrupt, but quick question: have you bought one just turnkey? Bought them from Pad Split?
Not yet, but I saw that they do that.
Okay.
Yeah.
I jumped on this. That's what I was looking at too. I was like, okay, this is interesting.
We're definitely gonna take a look at it, because we're more interested in the pad splits, and then the midterm rentals, like insurance relocation or traveling nurses. I don't want to do regular rentals because it's not enough cash flow for me.
Right.
Yeah.
Exactly. And it's not, it's scalable, but what you guys are talking about is more scalable. When you're dealing with these corporate organizations, insurance companies, these nurse traveling agencies where they're paying the invoice, one, that you're going to have guaranteed rent.
Exactly.
You can increase your pricing because they're not going to come at you and like $100 more a month. No,
Exactly.
Yeah.
they're going to pay that invoice.
Exactly.
So I love that you guys are doing that, because I really feel like if you're going to get into the midterm rental space and you want to scale, you really have to do it at the corporate level.
Exactly.
Yes, exactly.
Yeah. So yeah, you guys can use private money for all of this. Even if you guys are still continuing to wholesale while you get things going, you can use private money for that, whether you want to do a double close and raise the money for the acquisition, and then a day later they get paid back because the buyer comes in, and you can do that to better your chances of getting that wholesale deal. Or you can just use private money for the EMD. A lot of people in like Pace's group, Pace Morby's creative finance group, they've got a lot of people in there who call themselves Gator lenders. And these people have anywhere between like $5,000 to $20,000 that you can use, basically private money, and that you can use to go towards EMD and whatnot. And so, yeah. Oh, go ahead.
Because I'm seeing a lot of, so I'm getting a lot of emails from wholesale. Like I have these properties, and I go look at them, but they want, and I don't know, they want $5,000 earnest money and no option period.
Yeah, non-refundable, no due diligence.
How do y'all feel about that? Like I'm new, so can y'all school me?
Yeah. Okay, so this is when I was wholesaling, this is how I worded all my contract, and if the agents weren't cool with it, deuces. So I only want to pay $1,000 EMD. If they come back with 5,000 EMD, probably like New Western and some of these other wholesale companies talking about no option period, absolutely freaking not. No, ma'am. I always ask for a 10-day option period with $10 per day. That's $100. I'm gonna pay y'all $100 more, title company, so that I have a 10-day option period, because I need 10 days to figure out if this is really the house that I want. If they're not okay with those, $1,000 EMD at a 10-day option period with $100 option fee and a 30-day close, whatever, if they're not okay with that,
You walk away.
And somebody tried to get me when I was first starting off, man. Oh my goodness. They had basically told me that I was out of, anyways, basically they said that I was supposed to send them the EMD and that they could take me to court because I had already signed up. And I was like, no, I got my option period on here. Like I'm still within my option period, but I was vulnerable and new, and they scared the life out of me. And so anyways, y'all know what y'all doing, because people would try to
Yeah, just to share a little story. So I went and looked at a house on Friday and I really liked the house. And so I contacted the wholesaler back and I was like, okay, this is something that I want to do. I had a JV partner. But I'm taking the lead on it because I'm trying to learn. And so he was like, okay, well, I want, the earnest money. And so I'm like, okay. And then he texts me back and say, I want the earnest money it's like, I want it in 20 minutes. And I said, yeah,
Huh?
that was my I was like, yes, this is not feeling right. So I'm just gonna forego this property and I'll look for something else. And he was like, well, I've been doing this for 20 plus years and I haven't had any issues. I'm like, okay, well, thank you. Have a good day, sir.
Right. Have a,
Yeah,
thank you.
you
A
did.
lot of
Because
a lot of the real estate agents are very, I notice they're always like, I've been doing this for years and I know what I'm doing. Like, especially when you're trying to pitch a creative deal to them, it's
Mhm.
Oh
like the
yeah.
real estate agents, they're not, it's like they're trying to tell you that what you're doing is wrong, it's illegal and all this stuff. And I
they,
don't really like to deal with real estate agents. I know Pace says to deal with the real estate agents. But I don't know. I don't get a good vibe from working with them or trying.
yeah, you have to be very selective about the real estate agents that you work with. So if I'm going to work with an agent, this is going to be an agent that I meet at a creative finance real estate meetup group, because I know that if you're there at this creative finance real estate group, then you know about creative finance and you know all the different creative ways that we can purchase real estate. I'm not going to just call an agent from EXP or from one of these big real estate companies, because no, they're not. They're taught the very basics of how you sell a residential property. They're taught the very basics of how you secure a buyer and what you need from a buyer. And that's not the business that we're in. We're talking apples to oranges. We're not talking about the same thing.
I mean,
Mhm.
I went on Bigger Pockets and I thought I found a real estate agent who was, gonna do it creatively because I found him on Bigger Pockets. But as I was speaking to him, he kept trying to pitch to me that I should put 20% down. And I'm like, why would I do that? That's a traditional way. I found you in Bigger Pockets.
Mhm.
Right.
So even though he was in Bigger Pockets, he was still trying to pitch to me that I should put down the 20%.
That's
So I
Right.
was upset
That's-
about that. I'm like, you're wasting my time. I just spoke to you like for 2 days,
Right.
So I don't know.
I think that's because they think that they're not going to get paid. They hear investor and stuff like that. And then once you talk creative or you say the word creative,
Yeah.
they get scared that they're going to get cut out the deal and they're not going to get paid. So
Yeah.
we do agent outreach. So we do reach out to agents and everything. One of the things that we say, like if we're calling and stuff like that, and we target houses that have been sitting on the market for 90 days plus. We don't go for new houses or anything like that. And when we're talking to them, I always ask questions. I don't know. I kind of go fly off the handle. I'm a off the top of my head kind of girl, and I try to see, how the conversation is going. And so one of the things that I always say is, hey, if I could come up to, their price, would they be open to a creative option or something like that? And I'm learning now, like maybe not even using the word creative. Hey, if I could come up to your price and if I can give them, payments or something like that. I kind of go for more of the juggler. I could care less whether you hate the word creative or not. My goal is to establish what it is that I'm doing, because I don't like beating around the bush. And I like to establish, hey, my goal is to create a win for your seller, for you, and for me. And if we can't do it, then I know this is not the deal for us, but I still want to do business with you. And my goal is to create a relationship so that you can do deals. And I also, if it does, my goal is never to go in like I'm trying to get a house. My goal is, hey, I want to build a relationship with you. And I tell them, hey, can I send you what it is I'm looking for? And they're like, yeah. So I tell them off the rip, hey, I'm looking to buy houses, my rentals creatively. I'm looking through owner finance, or I'm looking to help people who, taking over their payments, who have low equity situations, pre-foreclosure, or they got to get out of their house fast and they're in a mortgage and your house has been sitting on the market for a while. You can't sell it. Let me be your option. I'm out there. I want to create these opportunities and stuff, but I want to win with you. And so that kind of opens them up. They may not be open in this deal, but it creates the conversation and it gives them a target. Hey, this is what she's about. you know, I'm not wasting my time with a traditional, I need to go out and get a loan for you. No, I don't want to do that. I'm telling you what I want to do. And if you come across this situation, hey, call me. Like,
Call me.
Yeah,
Mhm.
I'll try that. I'll try.
That is so good. That
Mhm.
Vanessa, I'm so glad that you brought that up because building the relationship is key. And actually agent outreach was one of the ways that I actually got started into wholesaling. And one of the things that I used to do, because Vanessa's right, they're very concerned about how they're going to get paid. And so another thing that I used to do when I used to talk to these agents and I would call them, I would just tell them, you know, hey, I'm a real estate investor. I'm looking to purchase this many properties or whatever else. And if you come across anything, I would love for you to represent me, right? Because I don't have any representation.
Mhm.
I kind of do this on my own. And so normally when they hear, oh, wait, she wants me to represent her. Sure. Oh, yeah, I can do that. You know, and then now they're perked up because they know how they're going to get paid, right?
exactly.
And then when I start going into, well, you know, sometimes I try to find deals that are off market. And if you do bring me deals that are off market, we can still find a way to compensate you, even though it's not the normal commission. So like if I get like a $20,000 assignment fee, maybe I can give you 3 or 5. Like, let's have that conversation. What does that look like for you? And I honestly, I talk about the money first. Reason why is because although people want to do a good job and they love their jobs and they want to help people want money.
Yeah.
Like,
Exactly.
how am I going to get paid? And then let's talk.
Yeah.
You know? And so
Yeah, I like what you said. I like what
Yeah.
you said, like talking about the money first, or even like, hey, if you bring me your off-market deals, I'll find a way to help you get compensated. So if I make 20,000 on this deal, does 3 or 5,000 look good for you? So
Yes.
I like that.
Yes.
completely transparent, you guys. Like Nessa said,
Exactly.
I don't like beating around the bush. Beating around the bush gives me anxiety. So I like to just go straight forward. And if they say, oh no, $3,000, that's not enough for me. Okay, cool. Well, thank you so much. I appreciate your time. Have an amazing day. Move on to the next, because we got to get through those no's as fast as we can so we can get to our
Yeah.
yes.
Exactly.
Yes.
Go for the no's. That's what I keep telling myself. I'm just like, I hate hearing no, but I'm just like, I'm gonna go for the no. How many no's can I get today?
I
So
know.
I love
eventually-
no's. Oh my
eventually-
goodness. I love no's because the people that told me no were the people that were supposed to tell me no. They were supposed to, right? So now that the yeses are coming in, they're the yeses that are actually aligned with me, my person, my purpose, my being. You know what I mean?
Yeah.
So yeah, it's different. So I'm glad that we got to elaborate on that a bit. Okay. So we are getting down to the wire. All right. When you guys are getting private money lenders to lend on your deals, you need to make sure that they are protected, secured, and insured. And I kind of talk about this a lot on my social media. This money is some of these people's life savings. This is their life savings. This is their retirement. This is like their inheritance that they got from, like, this money is important to them, and it can't just be like tossed about willy-nilly, right? We've got to make sure that we protect these people. We got to be a good steward, right? Because we all know that God will bless us with more if we're a good steward of the little bit. So first things first, promissory note. When you get your private money lender, you need to create a promissory note. And for all of you guys that joined today, I'm going to send you a template of my promissory note that I use to secure my private money lenders. Let me advise you that I am not an attorney. I am not a CPA, and I advise you to review the promissory note, have an attorney look it over, draw one up for you, but this is just what I use, okay? But I'll send that out to each of you. The promissory note is basically just what it says. It is a promise to pay. So if Vanessa lets me borrow $100,000 and I told her I'm going to pay her 12% annualized interest for the next 6 months, that's exactly what the promissory note states. It says the borrower, owe the lender $100,000 at a rate of 12% annualized, it to be due on this date. That's all the promissory note is, okay? Then once you have the promissory note, and the promissory note, that is something that because I've already had it drawn up by an attorney, there's just fields that I know that I just need to update on every single private money lender. And so you'll have that too. It's not like you need to create a brand new one every single time. I just fill in the name, the amount, the interest, you'll see it. But anyways, once you have that promissory note with all those terms, then that then goes to the title company. The title company is then going to, if your private money lender is coming in a debt position, they're going to get a deed of trust. So that deed of trust, that is going to be drawn up by the title company. Okay, that is not something that you're going to do. That's not something that you're going to get your attorney to do. That's something that the title company needs to do. And they're going to create that deed of trust based on the promissory note that you send them. Okay. And so once they record that deed of trust, that then tells you that you have a mortgage recorded against my property. So if I, for some reason, I stop paying you your interest payments, or if anything happens and I stop paying, you can come and foreclose on me because you have a lien position on my property. That's what that deed of trust is. It says that Vanessa has a lien against Tilisa's property so that if Tilisa does not pay, she can come get my property. Insurance. If you're doing a fix and flip, you need to make sure that your private money lender is on the builder's insurance. And why is that important? There's a lot of natural disasters going on right now. I don't want to say nothing, but I know my book of Revelations and some things happening. But anyhow, natural disasters happen all the time. I'm seeing houses go up in fires. I'm seeing waves come and just completely demolish houses, right? If that were to happen while you were in the middle of a project, you need to make sure that your private money lender is listed on that builder's insurance, because in the event that that house gets demolished and the insurance cuts a check, the insurance needs to know that your private money lender is in a lien position and that some of that money is owed to them. And so that's extremely important. And so typically after you've closed, you want to reach out to your insurance and have your lender added. I typically try to have that done within the first 2 weeks of closing. Okay. What was I going to say? Okay. Yeah, that's right. All right. Some lenders, let's go on to number 4. Some lenders may require you to give them a personal guarantee. And a personal guarantee just basically means that in the event that you buy the property, you renovate it, you list it, and for some reason you get less than what you thought you were going to get. Maybe you're like $30,000 short of what you thought you were going to sell it for. This personal guarantee says that regardless, you are going to take some of your personal assets and pay your lender off if the deal does not go the way that you planned. Okay. Some lenders may want some sort of proof. They may want to see that you've got assets that you can pull equity out of in the event that that happens. Some lenders may want you to show them like a bank statement showing that you actually have cash in your bank to support that. Other lenders will just say, I want a personal guarantee, and they won't ask you for anything. And so a personal guarantee, it's not a form or anything in addition. It's just a little note or a clause that goes inside your promissory note. And the promissory note that I'm going to send out to you guys already has it in there, because a lot of my lenders, not my personal lenders, let me rephrase that. I also raise money for other investors. And so when my private money lenders know that it's not me that they're investing with, they sometimes want a personal guarantee. And so they will ask. So I automatically have it in our promissory note, but it's included in there. And so just kind of be aware of that. If they were to ask, don't get offended, you guys. Like, I know so many people that get offended when the private money lender is like, well, can you personally guarantee it? And they're like, well, what is this, the bank? If I wanted to do a personal guarantee, then I would have just gone to the bank. Well, dude, now you just screwed yourself over, because literally it would have just been a clause in the promissory note. You know that you've got a good deal. You know that you're going to make the money that you're going to make. Put it in there so that just to make them feel good, right? But
exactly.
Right. even if you don't have the money to personally guarantee it, if the deal, and I say this with caution, and I say this hoping that you guys will take it and be responsible, right? In the event that you sell a property and you don't get the proceeds that you want, that you thought, and you don't have the actual money to pay your private money lender back, that personal guarantee, it's not, your house isn't going to get taken. You know what I mean? Like, you do owe these people, it's in there, but nothing catastrophic is going to happen to you if you're not able to pay them. So I always tell my private money lenders, this is risky. There's nothing about investing that isn't risky. So I need you to understand, and you guys need to be completely honest with your lenders. I need you to understand that you have to be okay never seeing this money again. Now, the likelihood of that happening is very unlikely. Why? Because I purchased everything undervalue, because I have a strategy and I have a team, and we've got a record of being able to do. So I can kind of tell them the reasons why I'm de-risking this deal, but ultimately it's risky, and it's not a guarantee, and you need to be upfront with your lender and say that. And I feel like a lot of the times my lenders are very appreciative when I am upfront with them, because it's like, look, dude, I have nothing to hide from you. I need you to go into this knowing exactly what you're getting yourself into, right? There's nothing to hide. Be a person of integrity. Don't try to not say certain things, or just try to like mislead by saying something but it means something else. Don't do that. All that's going to do is stress you out.
You know what? I agree with that. When we were talking to his cousin yesterday about our first fix and flip, and they asked us, how did that project go? Did you make money? And we were straight up honest with them. We said, one, it was a great deal because, it was our first. We learned a lot about how to deal with contractors, how to do the money with contractors, and so many other things. I said, but because his parents and my brother were our private money lenders on the deal. And I said, we didn't make no money. I said, but they got their money back plus their return. I said, we didn't get nothing of it. We went over budget on this project because of X, Y, and Z. I said, but we made sure that if anybody got paid, our people got paid back.
See?
So,
and that's all they want to know. Literally, that's all they want to know is the truth. What is going to happen in the event that this, and if you try, I'm going to tell y'all this, if you try to make it too glossy, if you try to make it to where it sounds too good, they'll sense it and they'll run.
Exactly. And see, that was another thing. We secured them with the fact, we said we bought right. We bought low enough. The lady was selling it for 125 and we negotiated the price down to 80. So we were at, I think we bought it like 38% ARV. So they were able to, I said we were able to still, recoup something. It wasn't what we wanted, but because we bought right, that, a lot of different moves when we had to make different choices. So
right, but it did end up working out, and you guys, things are going to happen in our real estate investing journey, and it's those stories, it's those experiences that let people know that you're real. Exactly. And people want to know that they're doing business with real folks. So these are the things that we need to secure our private money lenders. And then I just put this here, her investments, we do vet all of our investors. And so if you ever come to me with a deal that you need funding for, you'll notice that I try to get to know you. I might have like a long conversation with you because I'm like, I got to check these folks out. I got to see if they're going to be good folks for my private money lenders. Exactly. So if you guys are ever in a position where you are referring your private money lender to another investor, same thing. Make sure that you vet that investor. Make sure that you know that that investor is going to treat your private money lender right. That way your private money lender can come back to you once that deal closes.
Exactly.
Okay. Okay, so let's get into all the different ways that you can structure your private money lender, right? Some private money lenders are going to want to be in an equity position. Some are going to want to be in a debt position. And if they are in a debt position, they may want a particular lien position. So we're going to talk about each of those. Let's start with equity partner. So I talked to you guys earlier about John, my very first private money lender on the multifamily we own. So John, we actually brought him on as an equity partner, and my mentor, if she was listening to me right now, she would be like slapping my wrist because she's like, don't be giving up your equity. Don't be. I'd be like, girl, I don't mind sharing some of the pie. I really don't.
Exactly.
Look, you know what? So anyways, this, and the reason why I like equity versus debt in certain situations is because this. Let's say, and basically, so for those who may not know, when you are an equity partner, you are a real legitimate partner to the investor. So if you invest $100,000, you're not going to get an annualized percentage of interest. You're going to get a percentage of ownership. Exactly. So if let's say Vanessa, I keep picking on you, sorry.
No,
so let's
okay.
So let's say Vanessa has a property and she got it under contract. She needs $100,000. She comes to me and she's like, hey, Tilisa, I need $100,000. And I'm like, cool, I'll give it to you, but I want equity. And I actually want 30% ownership. So in this situation, if Vanessa has a buy and hold where we're getting monthly rents, I would be getting 30% of the cash flow every single month. And Vanessa will be getting 70% of the cash flow every single month. The reason why I like this is because in the instance that you're doing something like a pad split or an Airbnb, where your occupancy rates are going to vary based on the season, if you've promised your lender a 12% annualized interest in a debt position, and let's say that's $1,200 a month, and let's say you thought you were going to be at a 50% occupancy for your pad split, but it's looking like more 30% occupancy. Well, now you don't even have the $1,200 a month to pay your private money lender, and that's going to have to come out of your personal pocket. So the reason why I like to have an equity partner is because, okay, if our occupancy goes down to 30%, then my guy, you getting 30% of whatever we bring in. Like that's
Right.
what it is. Like
Right.
Oh man, yeah.
You know, so it just helps me sleep at night to know that either way it goes, my private money lender is going to be good with whatever we bring in because they're okay. The thing about an equity partner is your equity partner is going to weather the storm with you, right? They're not going to come after you if things go bad and another pandemic happens and people aren't paying their rent. They're not going to come after you like, hey, I'm about to foreclose because you ain't paying me my money. Your equity partner is going to say, all right, what do we got to do? Like, let's get in this. Like, they're going to weather the storm with you. Like, what do we do next? Right. That's what John is for me. And so when you're looking at your deals, you need to find out what sort of partnership makes the most sense for your situation. If you're in a situation where your monthly income is going to fluctuate on a seasonal basis, maybe you might want to bring in an equity partner and understand that if you do bring in an equity partner, you don't have to, you can buy them out at some point. Let's say that you're an equity partner, you have an equity partner, you guys are in this deal for 5 years, but after 5 years, you're just like, you know what, I cannot stand this person. Sir, I would like to buy you out, and you can do that. And so don't think that it has to be like a long-term like marriage. You can always end that at any point. But yeah. So debt partner. Now, debt partners, they are not going to weather the storm with you. Betty, you were on your own. They want their coins, either way it goes. So with a debt partner, this is where that deed of trust comes into place. So if Vanessa lent me $100,000 for my property, she now has a deed of trust, which is the document that says that she is the bank who financed my property. And so in the event that I don't pay, that property goes to whoever's in that debt position. Right. Now, when you're in a debt position, you are going to be in a different lien. There's first lien, there's second lien, there's third lien. That just lets you know the positioning and where you rank as to who gets paid first when the profits are dispersed. Okay.
Right.
So in a creative deal where you might be taking something over subject to, and you're bringing on a private money lender, you need to let your private money lender know that they're going to be in second lien position. And why is that? Because the bank who owns the mortgage, who you're taking over sub to, they're already in a first lien position. Okay. So the private money lender has to be in second lien. Some private money lenders don't want to be in second lien because it's a little bit more risky. So what I always do is if somebody's going to be in a second lien position, I always offer them more. I may offer them 18% annualized, or I might offer them 20. I've got to make it look really good because that second lien position is a bit riskier. Okay. So remember that and understand that the more people you have in your deal, the more risk that the person at the way bottom is taking. So if I've got to raise a lot of money, let's say I need to raise $500,000, I'm going to try to raise that $500,000 from one lender because I know my lenders want to be in first lien position. Now I got a couple of people who are like, I don't mind being in second. So I may reach out to them if I'm not able to raise the full 500,000. But initially my ultimate goal is to have one lender. And it's just easier to work with one lender when you're going through these projects and you've got to send people updates and all that other stuff. It's just so much easier having to do it with one person.
Right.
Okay. Any questions on this part before we move on? Good. Sweet. Y'all are getting it. Or I'm just a really good teacher. I don't know. I toot my horn. Okay. All
Great
right.
teacher.
Yeah.
I'm such a dork. Okay.
Actually, I do have a question.
Yes.
It's about the lien position. Like, say you're I wonder how you do it. Cause like if you're doing a fix and flip, you have a hard money loan.
Oh,
But they hard money lenders don't want the second lien position of a private money lender. How do you structure your deals for that?
so this is another thing I'm gonna say, and I pray that you guys use it responsibly.
Gotcha.
So most private money lenders do not want you to bring on somebody as a second. Vanessa is absolutely right. So anytime that you're already working with private money, there are certain private money lenders that will say, hey, I don't care what you do, but I don't want you to, basically, you can't add that additional person until the day after it closes. So pretty much they don't want to see it. They don't want to see it on the HUD. They don't want to see it. So basically, if you're going to do that transaction with your lender, you've got to do that on the next day with your title company. Some hard money lenders will do that, but my advice is to be upfront with your hard money lender up front. Some are going to say, absolutely not. I don't want to see it. Don't do it. You will be in trouble if we see that you did.
Exactly.
Other hard money lenders will say, do it the next day. I don't want to see it. So do that. Do what you want.
So that's just having a conversation because we ran into that, with that deal that we were talking to you about. And our whole thing is we don't want to do anything that's not of integrity. So we were just like, they said no. So we're not going to do it.
Yep. If they said no, it's a no. But if they're open to it, if they've done it, yeah.
Can you explain a little bit more? I don't think I'm understanding.
So,
okay. Yes. So when you are bringing on a private money lender, let's say you're doing a fix and flip, Tiffany, and you're going to use hard money for 80% of the acquisition, but you still have to come to the closing table with 20% plus closing costs, right?
Okay.
So that 20% plus closing costs would typically come out of your own bank account. But what Vanessa's saying is so that they can really go into this deal with $0 out of pocket, they were going to bring a private money lender to come in and pay for that 20% plus closing costs. But the hard money lender, because they're in first lien, they don't want anybody to be in a second lien position. I don't know why that is, because either way, they're going to get paid first. I don't really see why it matters, right? But some hard money lenders, that's just the way that they operate. So you'll find as you're dealing with certain lenders, you need to ask them, hey, I've got a private money lender that's going to be coming in with 20% at the closing. Do you guys allow that? And if so, do you guys want me to do that the second day? So now that you guys kind of know what they're able to do, you can kind of put those words in there, like, can this happen, you know, next day after we close, whatever, and kind of see what their thought process is. Okay.
Okay. But how would you add them on the after closing? Because you're going to need the money from the private money lender to get the other 20% plus the closing costs.
You know what? My friend Deba just recently did it.
Mhm.
Tiff, I think, are you following Deba?
Yes, I think so.
Okay.
Mhm.
This is what I'm going to do. When we're off of here, I'm going to ask Deba exactly how she did that. If she had to come up with her own money on the day of closing, and then she reimbursed herself with the private money lender's money. Let me find out how she did that, and I'll message you so that way you'll know. Actually, I'll send it out to everybody so everybody
Yeah,
knows.
send it out to us too, because this is the thing,
Yeah.
like, you hear people talking about, you know, raise private money for your deals, raising private money for your deals, but if you're doing fix and flip, nobody talks about this, and that's the thing we found out. I'm just like, why aren't y'all telling people
Nobody
this?
said-
They
Yeah.
are not saying a word, and I'm just like, we had to bump our heads, you know, get into trouble and then find this information out. I mean, we're learning, so I'm grateful for the learning opportunity, but I'm like,
Yeah.
dang, you're telling
Yes.
us to lose zero money out of our pocket. Sure, I want to do that, but you're not telling me I'm going to run into this issue and how to
Yes.
navigate that. So
Exactly. So there are these little things that a lot of the people are not going to share on social media. Everybody wants to share like the highlight reels. Nobody wants to share like some of the nitty gritty stuff that you have to go through. And
Yeah.
so what I advise you guys to do is to start calling and building relationships with these hard money lenders, and just start calling and asking them before you even use them. Find out. So that way you already have a list of approved private money lenders who you know will allow a private money lender to come in and in a second lien position. So that's going to be one of the action steps that I'm going to challenge each of you guys to do, is this next week, reach out to 5 different hard money lenders. And the week after that, reach out to 5 more. Get a list of at least 10 good ones, because the way that I was taught and the way that my mentor taught me is, if you have one of anything, you don't have enough. So if you have one contractor, you don't have enough, because if you lose that one contractor, now you're screwed. You know, if you've got one lender that you go to and this one lender is not able to fund your deal, now you're screwed. You don't have any other lenders to go to. So build out your network of people so that way you have options.
Oh, I have a question, Tilisa.
Yes.
You know how I was saying that it would be good if I can get like a community so that we can touch base like every week.
Yes.
I don't know if you have something like that, but like if you can like give us homework, that would motivate me. Like, okay, I know I have to go in front of these girls and I have to prove what I did.
Yes.
That will benefit all of us here on the screen, because even though we're in different states, we can support each other.
Yeah.
I'm I don't have a lot of money, but I'm sure I can give, we could give you something every month, to be our little teacher. I don't know, like, if you could think about something like that, I think that will really start like a good community, and you could get more people,
exactly.
we could talk to other people in the community, and then we could have homework, and that way we can build a business like that, because I know that I have mentors on here that are doing the same thing.
Yeah, absolutely. I'm glad that you actually mentioned that, because I do have a Facebook group that's a private Facebook group that I just had my assistant create for me like 2 weeks ago. So literally there's nothing in there. You guys will be the very first ones to join that. So woohoo to the 3 of you.
That's awesome.
Yeah, I like it.
I will share that link with you guys. But yeah, you guys we're gonna be sharing our journey as we're raising private money. And I will be asking you guys, did you reach out to this many people and whatnot? So I'm glad that you mentioned that, Crystal, because I was gonna get there. So yes, all of you guys will be invited to my private Facebook group.
Great.
And then Lisa, do we need to reach out to 5 or this week 5 the hard money lenders in our state? Or
Yeah, yes, wherever you're going to be doing deals at. And you know what? There's some private money lenders, like I don't know if you guys have heard of Longhorn.
Yeah.
Longhorn, yes, I believe that they're almost nationwide now. So you can do some of the local ones, but do some of the nationwide ones too. Try Longhorn for sure.
okay.
Yeah.
You know, I didn't
Oh, go ahead.
Oh, I was just saying that's more his area than mine because he talks to the hard money lenders, so he'll go out there and just.
Oh, awesome. Okay.
And that y'all gotta have one of each. Y'all gotta have one of each. See, me in my relationship, I'm the talker. I'm gonna talk to the private money lenders. My husband's gonna make sure I have everything that I need. He's gonna make sure that my hair is good. He's gonna make sure that the photos are bomb. He's gonna make sure that I have everything that I need in order to be successful. So yes, everybody serves their part. Okay, so let's get into this real quick, you guys, because I think that we are starting to run out of time. So I apologize for that. So this is right here. I wanted to just kind of show you guys how some people like to structure their deals depending on what they're doing. And so, like I told you, there are people like you guys, investors, who come to us to raise money for their deals. And so that's what you're seeing right now. This is the one pager that our assistant puts out every time we have a new deal that needs to be funded. And so if we just look at this first one right here, we get them from all over. This first one was in Chicago. The investors bought a property that was basically turnkey, had just been renovated, and they're going to do something similar to not a pad split, but like renting out each room individually. And they were able to take over this mortgage subject too. So their entry fee was extremely low at 44,000. The investors were paying them 12% annualized interest for a 6-month term with the option to extend. And so this private money lender, they will have been making $440 a month on that $44 that would have just been sitting and collecting dust. So depending on your deal or the way that you structure it, these people right here, these investors, because they're going to be doing a midterm rental, the reason why they gave a term to a 6-month term with the option to extend, because they would really like an investor to stay in at 12 months. That way they don't have to refinance out so fast. But they wanted to increase their chances of a lender accepting it. So they put 6 months with the option to extend. So when I put it out there to our private money lenders, some of our lenders were like, hey, well, how much can we extend it to? And I'm like, oh, well, you can actually extend it a year. And they're like, okay, I'd rather just do a year then at 12%. And you would, because you're going to make more money. And so you can word these any way that you want, but remember that you want to present yourself as a polished professional when you're coming to these private money lenders. They've got to be able to trust you. They've got to know that you've got some sort of like professionalism. So I always come, you guys, with my A game. I come with excellence every single time. I want them to be wowed by my funding presentation so that they know I actually took my time to put this together for them. So just sending your lender a text and saying, hey, I got this deal. I need $100,000. I'm paying 10% interest with like no picture, it's kind of like, you know, send them this and then say, hey, let me know if you want more info. Right?
So is this an app that you created, or this is Canva or?
Canva.
Yep, this is on Canva, and this is something that I believe it's fairly simple to make. I'm not going to lie, I don't personally do them. Our assistant does, but I'd imagine it's not real difficult because I think it's mainly like you just upload your photo and plug it into the Friends. Anyway, so yes, it's Canva. And so Canva has beautiful templates that you can use, type in flyer or whatever, and you can create something beautiful. And so this middle deal right here in West Virginia, so you'll notice that this guy, he needed $130,000. And because he needed so much, he was like, I'm willing to pay a little bit more in interest because I know that 130 might kind of make people blink a little bit. So I'm going to say I'm going to pay 15% annualized interest. And he only needed the deal for 6 months. So you guys, when I got this deal, I was so freaking excited because I know that my private money lenders are going to swarm over this. So the moment that my assistant was done with the flyer, I sent it out to all my private money lenders, and within literally minutes, I had investors like, hey, Tilisa, can we schedule a call on that deal you just sent? Hey, can we schedule a call? And so it's like, that's how fast it is when you have a good deal.
Okay. I have one question. So
Yeah.
the 15% for 6 months. Okay, so let's talk about the numbers. So
Yes.
the private money lender will get the 15% every month for 6 months.
Yes.
So what if it goes, okay, what if he just needed for 3 months? Do they just get it for the 3 months?
That's a great question. And you know what? It's so funny because one of our investors just asked that exact question yesterday. So excuse me, if you say that you need their money for 6 months and you end up being done in 3 months, because the promissory note that you guys have agreed to states that you're going to pay them 12% annually for 6 months, you've still got to pay them for that 6 months of interest, right?
Okay.
Now, let's say you go over the project timeline. So 6 months passes and you're still not done with the project. What some of our private money lenders will say is, okay, I'll pay you the 130, I'll take the 15% interest, but if you don't sell and I don't receive my principal back by month 6, I want that monthly interest payment to increase to 18% on that 7th month.
So is it best to just put a few months on the back end just in case? So instead of 6 months, maybe 9 months?
Yep, that's exactly what I always advise, because things are going to happen about 80% of the time. You're going to go over on the project because contractors take longer. There's weather things that happen. I mean, just anticipate that it's going to take longer than what you think. So yeah, always add that little buffer in there, but know that yes, you are going to have to pay that. Now, some investors that I'm seeing, they're like, hey, we can play 15% flat. And basically what that means is they're willing to pay 15% of $130,000 flat, whether the lender's in it for 6 months or whether the lender's in it for 2 months. Some investors are like, I'm just going to pay you that 15% flat. So I got my handy dandy calculator. I'm going to see what that is. So 130,000 times 15%. So that's 19,500 if they were to do it for an entire year. So normally, if it's going to be annualized for 6 months, if you divide that by 6, then the investor is only actually paying 3,000. Is that right? $3,250.
Mm-hmm.
Yeah. Okay. So if it's annualized, that's how much they're going to be paying at the end of the 6 months. But when investors come in and say, hey, I'm going to pay 15% flat, they're saying, I'm going to give you that 19,000 regardless. So you as the investor need to decide whether you want to pay somebody a 15% flat or a 15% annualized. I always am going to do annualized. Why would I pay you a flat? I don't know why these investors come to me like, yeah, we'll just pay them a flat. I'm like, why would y'all do that? You don't have to.
Mm-hmm.
You don't have to. You're just doing it for what? So anyways.
Can I ask a question?
Yeah.
If somebody gives you money, like 100,000, and then you have to pay them 12% every month, you're paying them the 12% every month, but how do you pay them back the money, the 100,000?
Okay. So let's say
I'm not doing fix and flips.
Okay, gotcha. You're not doing fix and flips. So in this situation, you're going to need to decide whether you want to bring on an equity partner or a debt partner. If you bring on a debt partner, you're going to want to make sure that debt partner is in that deal for at least 3 to 5 years if you're going to do a buy and hold, because you need time for that property to appraise enough to where when you go out and you do a refinance, when you pull out that 80%, when you do a refinance, that is enough money to pay back your private money lender. So I don't even have that deal on here. We just did another deal where it was a $55,000 raise at 12% interest, and it was a 5-year term, and it was a debt position. And that the investor wanted all 5 years because they knew that by that 5th year, the home would have appraised so much so that once they did a cash out refinance, they could then just pay their investor off. And then now they just got a small little monthly payment that they can basically use. They can use their rents to cover that small monthly payment.
So the longer the years, that's how you pay them back the money?
Yes, exactly. So they get the principal back at the end. So they'll get the $100,000 when you refinance. So let's say you bought a house for 200,000 and in 5 years it's appraised at 400,000. You're going to be able to take 80% of that from the bank. And when you do, that's when you're going to pay your lender their $100,000. But every single month you will have been paying them just monthly interest on that $100,000. So you might be paying them $1,000 a month in interest. That has nothing to do with the principal balance that you owe them at the end of the 5-year term. Does that make sense?
Yeah, I'm
Yeah.
so glad she asked that question, because that was one of my things, like with the buy and hold, like I got it, but I didn't know. I was wondering, making sure that it's a longer term versus just 12 months. Cause I'm just like, that's not really enough time.
No.
I'm not good
Yeah.
My husband is good at math. I'm not good at the math. But so basically you're saying if you give me 100,000, I would pay you the $1,000 a month. That's giving you interest. But the years is what's going to pay you the 100,000 back. Right?
At year 5. So let's do it like this. So let's say I gave you $100,000 and let's say I'm going to get 10% annualized interest, right?
Yeah.
Okay. So times 10%, that's $10,000 in interest that you're going to be paying me a month from your cash flow. So if your property is cash flowing $2,000 a month, out of that $2,000 a month, you're paying me $1,000 a month, right? Okay. So that means that by year 5, you will have paid me 50 grand in interest, just in interest. So by the end of year 5, that's how much I would have gotten distributions all up until that last 5th year. Once year 5 comes, then you're going to go to the bank and you're going to say, hey, bank, I'd like to pull some money out of my property. I'd like to do a refinance. And they're going to give you 80% of the value of your home. So let's say you purchase it at
you have to have good credit. So if this is my home and I want to do the refinance, but the credit isn't good, are they going to refinance me, or are they going to say your credit's bad, we're not going to give you the money, the refinance money?
Crystal, you don't have to worry about that, because within 5 years your credit will be fixed.
Exactly.
Okay.
Yeah.
Your credit will be fixed in 5
That
years.
part.
If you're raising private money and you're closing deals, I would hope that once you start bringing in some money, you pay somebody to fix your credit, because that's what I did.
Yeah.
I just wanted to cover all the bases, because I just got remarried, but I got a divorce 2 years ago, and he messed up my credit because he wasn't paying the car, my ex-husband. So I'm in bankruptcy now to fix my credit, while doing these wholesale deals. But I'm paying off the car that he didn't pay off. So
Right.
I'm asking because nobody wants to touch you when you're in the bankruptcy.
Right. So, okay, a couple of things, because I've also got a bankruptcy, right? And it's still on there. You can still see it. That's not going to prevent you from being able to do anything.
I had a question.
Yeah.
Wouldn't it not affect her just because it's going to be in your business name, not your personal name? So
that's one. And then 2, depending on what kind of loan you're getting, like a DSCR loan, it's based on the income that the property brings in. It's not necessarily looking at you as a person. So they're still going to run your credit. They don't care about the bankruptcy. They're still going to run your credit, but the only thing that's going to determine is your interest rate. So if you've got an amazing credit score, then you might be able to get refinanced at like a 4 or 5% interest rate. If your credit's below a 620, they may refinance you at like 8 to 9 to 10%. Either way it goes, you're going to get a refinance. What your monthly payment to them is going to be that's going to be the thing that you'll need to figure out.
Yeah, because I went to the bank and they still wanted, even though I had the LLC, they still I said, I thought you weren't supposed to, ask me about my social security number, my personal social security number, but they still wanted it. So
Yeah, they still want it. Oh yeah, they're
Yeah.
still gonna want it. Absolutely. But if you're using a DSCR loan, which is what I recommend, a DSCR loan does not look at your credit score to determine approval.
Yeah,
It
it's based
looks
on the
at the,
asset.
huh?
I was saying it's based on the asset, it's based on the house. So and how much it
Exactly.
cash flows. So that's all they care about.
That's all that they care
Yeah.
about. So yeah, either way it goes, you don't have to be intimidated. I was intimidated about that too, which is why my very first private money lender I brought on as an equity partner, because I was thinking the exact same thing. Like, okay, well, in 10 years, right? 10 years. I'm thinking like, I'm not gonna have my credit fixed in 10 years. I'm like, in 10 years, am I going to be able to refinance? And so I just kind of went to that decision. Like, I'm just going to make him an equity partner so I don't have to deal with that. You guys can do that. But we're not going into this thing with a spirit of fear.
Exactly.
Yeah.
Right.
So I know you're so I know you got to get through the presentation, but at the end, can I run this opportunity by you guys? And then maybe you guys can help me with this, because I went to go, I'll just say it shortly. I went to go and see this property yesterday. And I have the opportunity to buy and hold it. But yeah, I'm a little nervous. So go through the presentation and then
Okay.
we can talk about it at the end.
All right. I'm pretty sure if it's a buy and hold, we got a couple of options. So, okay. All right. So you guys, real quick, I'm going to just get through this. So you just see all the different ways that you can structure the deal. This last one was $55,000. They did a 15% annualized interest for a 6-month term. These tend to be shorter terms, you guys. But don't be intimidated to ask for a longer term. There's nothing wrong with that. And one other thing that I wanted to mention is don't feel obligated to pay your private money lender interest on a monthly basis. You don't have to. You can choose to pay them on a quarterly basis. You can choose to pay them annually. You decide what you want to pay them, but you have to make that determination based on your cash flow. So if you know you're doing a flip project and you're not going to be receiving any cash flow for the next 6 months, but you've promised them 15% annualized interest, then that means that you need to let them know, hey, I just want you to know that interest payment and principal payment will all be paid to you at the end of the project. And so you get to determine that. Yes. So that's another way that you guys really can structure these deals that most fits you. And if it doesn't work for the private money lender, cool, find another one. There's a billion people out here with money. Okay. Any questions on that before I go to the next tab? We're just about done, you guys. Okay. Oh, yes. Okay. So real quick, what do you say to a potential private money lender? So I am going to do something really quick. I'm going to add something in the chat, because what you guys are going to do, this is a part of your homework. We're all about taking action. So I want you guys to start finding prospective private money lenders now. And so when I first got into this private money space, like I told you guys, I was not comfortable just asking people for money, right? And my mentor, not Amy Majori, another mentor of mine who's much older than Amy, she's raised like $50 million in private money. She's like 70 years old. Anyway, she's amazing. So she told me this. She said, Tilisa, when you are wanting people to, when you're wanting to present a deal to a private money lender or to a group of private money lenders or whatever, she said that do it in a way where it doesn't seem like you're asking them for something monetary. So she said, do something like this. Reach out to a couple people on your phone and say, hey, I got a quick question. I'm in the middle of raising capital for my real estate business, and I'm offering investors double-digit returns backed by real estate. I'm going to be giving an online presentation for potential investors and could really use your feedback on what I need to do to improve. Are you okay with me adding you to the webinar email list when I host it? If so, which email should I use? Thank you. And so basically when you send this, the only time that you're gonna send this out to a bunch of people today, 10 people, but all that you're looking for is for them to send you their email to say, yeah, when you have your webinar, I'd be happy to provide you with some feedback, right? Obviously you want to target people who you would like to be potential private money lenders, but don't tell them that. Tell them that you want their feedback. And so when they join your presentation, and I'm going to show you guys what that funding proposal should look like. When these people join and you go through it, you're not just talking to one person, you're talking to like a group of people. So then you're less intimidated, right? And you're just talking about the deal. And then after you're done, those people that you've said, hey, can you provide me with your feedback? They're going to be wondering like, so you were talking about double-digit returns and you were talking, so what is this? Yeah, you did a great job. Yeah, you did good. But so tell me more about what you're doing. And that's literally how I was able to build out a community of private money lenders, by just reaching out to random people in my phone, old dentists, old doctors, old coworkers, old friends from college, anybody, matter of fact, new friends, people who know that I'm doing this real estate stuff, right? It doesn't have to be your friends and family. It could be anybody, but I'm going to copy this message and I'm going to paste it in the chat. And I want for you guys to just send that message to 10 people in your phone. And all you're doing, like I said, is you're collecting their email so that when you have a deal, you can say, hey, you guys, I have this, I'm putting on this presentation on Saturday at 12 o'clock. I remember you said that you'd like to give me your feedback. Here's the link to join. Boom. Once they join, you need to be confident in your numbers. You need to be confident in your exit strategy. You need to be confident in your spirit, because they're going to sense it. Talk about your deal like you know it's a good deal.
Okay.
And then at the end, don't say, if you want to invest, call me. Say, if you'd like to learn more about what I'm doing, feel free to reach out. I'd love to chat. And then let them come to you. Okay. And now you've got a group of people that are now potentially private money lenders who are going to be able to listen to what you have to offer. A lot of the times, the only reason why people don't become private money lenders is because they're not educated on how to become it. They don't even know what it even means to be a private money lender. So if you're inviting random people to come to this event and now they know about private money, you may not know. You might have $1 million sitting in your webinar, and now you can put it to work. So let me, I'm going to copy and paste it in the chat. That way you guys don't have to try to type it all out. Make sure you remove the name Alex though, okay? There we go. All right, so how are you guys feeling right now about having to reach out to 10 people? Are y'all nervous? How are y'all feeling? Go ahead and talk out while I get this in here.
I'm a little nervous. Just
You're
a little
nervous? Why are you
Yeah.
nervous?
I'm a little nervous because I don't know if I have a circle of people that have the money, like, I don't know. I don't know. I don't know how to feel right now.
I know how you feel, and I felt that same way too. But what we have to do is we have to get our minds out of other people, our brains out of other people's minds, because we don't know what their pockets look like. There's people that I thought that for sure, there's no way that you have money. And they're like, oh yeah, my aunt passed away and she left me $100,000 and I don't know what to do with it. It's like, oh, okay, this is somebody who you do not look like you got money, my guy. So you never know. Do not underestimate. Don't even go in there thinking, I don't know which one of these people has money, because it doesn't even matter. All your job is to get the information out. You've got to start practicing. This is you putting in the reps. You've got to get out of that feeling of discomfort. You've got to get to confidence. And the only way that you get to confidence is by hosting these regularly, hearing yourself talk, feeling the confidence in your numbers, and then it will start to translate to your audience. You'll get easier, but this is you guys doing the reps. Okay.
Okay.
All right. So I just put that in the chat. You guys should see that. Go ahead and copy that message and take out the name Alex, replace it with whoever it is you're going to be sending it to. And really, really, really quickly, I just need you guys to copy, paste, send, copy, paste, send. Boom, let's go.
Okay.
The third one, I can't see the third one. It's really tiny. Where it
I'm gonna
says-
zoom it. I'm gonna zoom it in here in a minute, but for now, just go ahead and copy that link. I mean that text I sent you and send that out, and then I'll zoom it in once we get down there.
You text me? When?
No, it's in the chat, Crystal.
It's in the chat. Hold on. Oh, the chat. Oh.
Are you on your computer?
Yeah, I'm on the computer.
Oh, hold on.
Hold on. I think
What do you have on your phone? Facebook? Because I can send it to you real quick on Facebook so you can have it on your phone.
yeah, you
You
can
want to
send
do
it
that?
on Facebook. Because I was going to, how am I gonna, if I can copy this? It's not letting me copy it. Oh, I mean, I could use my phone and,
Okay, so pull up your phone and
oh,
pull out
yeah.
Facebook.
Okay, you sent it. I see it.
Yep.
Okay.
And make sure you just change the name, change Alex to whoever you're texting.
Okay. Got it.
All right, you guys, I'm gonna give you guys 5 minutes for that. I'm gonna go take a water break and then I'll be right back.
Let's see this.
People on their phone, potential people who like this time comes around, we can do it.
1992.
Some of you guys may start to see that people are responding fairly quickly, which is a really, really good sign. Make sure that you have somewhere to store all these emails because this is you building your private money lender, potential private money lender email list.
I'm gonna text AJ too. All right. I need to reconnect with Andy. I'm gonna touch base with him on separate. Andy, I feel like him and what's her name might be interested. You know Miss Ann a long time ago.
Yep. Yeah.
Let's send it to Miss Ann. There's 3.
Oh, that's bigger. Man,
I can send it to Brandon even though we had it.
I zoomed in.
I like that. Yeah.
Okay.
Tiffany, you done?
Yes.
Good. How many did you send out?
I sent out 5. Do I need more?
That's good for now.
Okay.
That's good for now. Because I know we got to move on. Where you guys at, Vanessa and Keith?
I sent
2.
out 4.
Like 2.
Okay. And what about you, Crystal?
I only sent out 2. I would have to find people. I don't have people in my life that I could send stuff to.
Okay.
Yeah.
2 is good. Hey, that's better than none. So you guys, that's a quick way that you can bring in just random people into your world and kind of share with them what you're doing and start kind of probing them to be private money lenders. And so once you have a deal and you're going to do this presentation, you guys are probably wondering like, okay, Tilisa, what am I going to be presenting during this presentation? Like, how is it supposed to flow, right? Okay,
Definitely.
that's a really great question. I'm going to pull up a presentation that I use when I am, let's see if it's going to allow me to share that screen. Okay, a different screen popped up, so I've got to reshare. Hold on. So let's stop share and then reshare. Here we go. Okay. Should be coming up here in a second. Okay. All right. So you sent out all these messages. People are like, yeah, go ahead and add me to your email list. You take their email down, you compile them. And then, Tiffany, you come across an amazing buy and hold deal. And you're like, oh my God, the returns on this are great. Like, I need to get this in front of some private money lenders. So that you're going to create a presentation. I'm using Canva. This is what we use. Again,
Okay.
I'm going to say, I do not personally put this together. So if there's any errors on here, it's not my bad. So the very first thing that your investors want to see, they want to see the address and they want to see some sort of image of the property. I always do that, an image of the property and the address. That way, if they want to just quickly look it up real quick, they can do that. I have a disclaimer on mine that just says this information is for educational purposes only. Do your own due diligence. Got to protect my coins. So got to put that little disclaimer in there.
I got one too.
And so the very first thing I do is I put on here some information about myself, because if they are wanting to invest with you, they kind of want to know about you. So this is your time to like highlight yourself. Where did you go to college? What did you do before you got into real estate? Do you have a family? Do you guys like to travel? Like, let the private money lender know who they're going to be investing with, because you guys, it is scary giving your money to somebody who's across the states, somebody you've never met before, and you're trusting that they're going to pay you this interest or whatever it is, right? So give them as much information as you think that they need in order to get to know you as a person. So because we do this as a business, mine is going to be a little bit more in depth. So you guys just bear with me. So I've got my team. So this is Rachel, my operations manager. It talks about her. And then because we have investors coming to us, we have the investor who's going to be investing with the private money lender. This would be you guys. We have them send us their bio and a photo. That way our private money lender knows who they're getting into bed with, right? And so that's important. Put a nice picture of you and your family. People love families, y'all. So if you got kids, put them kids in them photos, y'all cheese right quick. People love that stuff. So after that, you guys need to have the information about the property. Very similar to how an agent will put some nice information out on Zillow about the property. You want to go ahead and highlight the property. So the first one was highlighting yourself. And then the next one is going to be highlighting the property. And then now we need to get down to the numbers. So this particular deal breakdown where it says exit strategy, this is probably the most lengthiest one I've ever seen before. I don't know why my assistant put every single thing on here. Normally we don't do that, but that's weird. Anyways, they did. You don't have to be this detailed. Tell the private money lender what your what your acquisition strategy is. So on here, they put the private money lender is going to be in first position. Funds will be used to cover the following, but not limited to kitchen remodel, new appliances. Let me zoom that in so y'all can see a little bit better. There we go. Anyways, so you guys can see all the things that they have planned on doing with this property. And then we come over here and then we get to see the purchase price, their ARV, the rehab cost, and then, oh, what's there? What does the private money lender want to see? How much am I getting paid? Do not forget that. Lender wants to know how much are they going to get paid? And so you can see right here that this investor said that they're going to pay $1,625. That's the monthly interest payment. But they say right here, prefer to pay on sale of property, and can pay, basically they were trying to say pay monthly if required. See, that's the VA. We got to help him with that. Anyways, so you guys can put those same stipulations in your proposal. You can say that this is what the monthly interest payments would be, but I prefer to pay you all the interest at the sale of the property. However, if that does not work for you, I'm open to monthly payments if that's what you want, right? So you need to make sure that you specify what it is that you want and what it is that you can do if they counter on that. Any questions on this page as of yet?
I have one question, and
Yes.
so is that, I see the annualized, the PMIS. Are we assuming that they're asking for the entire amount, the purchase price and the rehab?
You're talking about this investor?
Yeah. Is he asking
Okay,
for the
so
whole?
on this next page, so they're doing $130,000 raise, and their exit is to fix it and sell it. That's what their exit is. So what was your question again, Keith?
No, that asked me that answered
Okay.
it. He was asking how much he was asking for, because I saw the private money.
The ARV and everything. Yeah. So I always put the ask as one of my very last pages. And so you want to put on here how much money you're asking after they've seen how much you purchased the property for, after they've seen how much the rehab is going to be. They've seen all of that. Now they want to know, how much money do you need? So 130,000, we're paying 15% annualized. This is in a first position, and the term length is 6 months. And there's an exit to repay you, the lender, when they fix and sell it. Okay. So you want to have all that information on it. You guys notice that other than this page right here, typically this looks very simple. An acquisition strategy that one of our other investors just put on there was took over the mortgage subject to house is in immaculate condition. We'll throw on some paint and put in some carpet, and we're going to resell it on a wrap. So it was very clear. It didn't have like all of these replace the roof and all that stuff. So put right there the information that you feel the lender's going to need. But what you don't want to happen is you don't want the lender to come back to you after they've seen all this and say, well, what's this? And how much y'all paying for this? And you want for this to give them enough information to where they can make a decision. We don't need them asking for a bunch of stuff. When they start asking for a bunch of stuff, that means you didn't put enough good, clear, simple information within that funding presentation. Even if you put a lot of really good data in here, people don't read. People like for things to be simple. So even the biggest billionaire will look at something that looks too chaotic and will literally close the book because it's not simple. Keep it stupid simple. Okay.
Like you're talking to your kids.
Like you're talking to your kids, like a kindergartner, really.
Exactly.
To be completely honest. So then what we do is we like to show our private money lenders what our process is. What does it look like? So right now you are here. Let me zoom in. So right now you're here. We're doing the property analysis overview. That's what this is. That's what we're looking at, the property analysis overview, right? All right. Then Once the lender agrees, then the lender receives the documents securing the loan. So what were the documents? Can somebody tell me what were the 2 documents that we need to use to secure our private money lender?
Promissory note and the
Promise-
deed
The
of
deed of
trust.
trust.
And the deed of trust.
Exactly. So that's what we're talking about right here. We are going to send those documents to the lender. They're going to sign them. And then after they get done signing, the lender's going to fund the deal full or partially, depending on what if you got private money or whatever else. Anyways, they're going to send that money directly to the title company. Okay. You want them to always send the money directly to the title company. There's some investors that will say, yeah, just send it to my bank account. And some people do that, and that's fine. I always tell my lenders that I'm going to have them go through a title company because it just makes them feel more secure. Yes, an attorney is going to be drawing up these documents. An attorney's going that money is going to be sitting in escrow. All those words make the lender feel more comfortable about lending to you. And then after that, once we receive the funds, the property is then purchased, and then we are going to renovate the property. And depending on what our exit strategy is, we're going to either sell the home or we're going to rent it. And then this way. And then once we sell it or we rent it and we refinance, whatever our exit is, the lender's going to receive their principal and interest, depending on how you structure the deal. So this part always is going to change for everybody, depending on your exit. And then after that, we're just going to repeat the process, and they're going to do it again. So a lot of my private money lenders, some of them want to start off with a lower amount. They may want to start off with $50,000 just to kind of go through this process and see what it's like. And then afterwards, they're like, "Hey, I got 500,000." I'm like, "What? You told me you had $50,000, Gary. Where did this 500 grand come from all of a sudden?" And you guys will notice that people always have more money than what they tell you they have every single time.
That's so true. That is true.
They tell you they got 20,000, they a whole millionaire. Don't believe them. So this is right? This is what I used to do, because when people would tell me like, "Oh, I've got 60,000," I would send them deals for like 55,000 or whatever, and they wouldn't touch them. So I was like, you know what? I'm about to start sending them all my deals. I'll send them a deal that we need 200,000, and they're emailing me, "Hey, Tilisa, I'm interested in that deal." I'm like, "Susie, you said you only had 60,000. Why didn't you tell me?"
I learned that from my mother when I was growing up. My mother just went to Jamaica, and she told me 6 months ago she's broke and don't have no money. Yes.
So you guys, so this funding proposal, this is key. I feel like this is one of your credibility pieces that's going to take people, it's going to make people take you seriously. So put in the additional effort to make sure that this looks good. This is the way that, let me see. Oh, here we go. All right. Oh, goodness gracious. Tilisa, get it together. Get it all the way together, man. Hold on. Okay. Anyways, I'm just going to go through that really quick, just in case you guys forgot any of the slides. So remember, you're going to put your information, highlight yourself, highlight the property, do the deal breakdown. And then after that, you need the ask. You guys can be screenshotting this if you're on your phone, or if you have you can screenshot. Tell me when y'all got it. The ask is really important. Don't mess this up. Somebody almost got fired in my company for messing this part up. Because once we put on here that we're doing $130,000 raise, and I send this out, I can't go back and say, "Oops, sorry, lender, we actually needed 150. We actually just messed up on the funding proposal." And so, you've got to be professional. If you can't get something like this right, then they're going to think, "Well, what else can she not get right?"
That's true.
Okay. All righty. Any questions there? And we've got about 6 more minutes. We're going to wrap it up. So that's it, you guys. And you can put on here something about, the process, what the process looks like. If you don't even know what your process looks like, then you can not put this part, but at least explain to the lenders what the process is going to look like from your perception so that they know what they're getting into. Because a lot of the times they really don't know. Like they've never done this before. They don't know what it's supposed to look like. So the more information you can give them, the better. And then lastly, I just put on here how their money is going to be protected. This at the bottom. So we talked about the promissory note. We talked about the recorded deed of trust. This joint venture agreement, I put that on here because if you're going to be doing a deal with an equity partner, instead of doing a recorded deed of trust, you're actually going to just have a joint venture agreement between you and the private money lender. That's basically what I told you guys. You're going to have a new operating agreement. You guys are going to an agreement saying he's getting 30%, I'm getting 70%. And so that's a joint venture agreement if you're bringing in an equity partner. And lastly, just share your information. And so when you guys are going through this presentation and you're talking to these people that are going to be giving you their feedback, that's exactly what you're going to be doing. You're just going to be going through each slide. You're going to be explaining each one, and then you're going to move on to the next. And if anybody has any questions, they can ask questions when you get to this very last slide. So that's another homework assignment. Go on to Canva and just type in funding presentations, y'all. Don't even try to recreate the wheel. Type in funding presentation, look at all the different funding presentations, add your logo, add your colors, slap your words on there, your pictures, and boom, you're a professional. Okay. All righty. So I'm going to stop sharing that screen because we've got one other thing just to go over really, really quick, and then we are going to be done. I went way over, but y'all should be glad though. Y'all really should.
am.
Yeah.
I am
Okay.
too.
Okay, good.
Yeah,
Because this is I mean, it's good
That's
information, y'all. If I had this information when I was starting off, I would have been a millionaire in the time frame that I really wanted to be a millionaire. Okay. So come on, computer. Let's go. Me and my husband were watching Harry Potter yesterday, so the accent is still in me. Okay, here we go. Lastly, when you guys are meeting new people for the first time, let me zoom this in. This is how I approach people, you guys, and this has literally worked for almost every single person. So if I'm gonna role play right now. Let's say I meet somebody at the grocery store, a little old lady, and she's right there getting the tomatoes, and I come over there and I'm like, excuse me, can I grab the tomatoes? She's like, oh yeah. And then we just kind of start having casual conversation about the weather and all that other stuff. And then I'm going to say, what do you do? You're so interesting. What do you do? What do you do for a living? And they're going to tell me what they do for a living. Why? Because people love to talk about themselves. Oh my God. People love talking about themselves. You give them an opportunity to talk, they will not stop, right? So that's how I open up every conversation. One, the geographics is a great way to open it up. Since I'm new to Virginia, I always ask people when I meet them, so are you from here? Because I just moved here from Dallas, which I can't really say that no more because it's been like 9 months. And like, it's not really like just moved here. I've been here for almost a year. But, that's a great conversation starter. Where are you from? And then what do you do? And then once they tell you what they do, typically they're going to ask you, so what do you do? And that is your moment to shine. Okay. It does not sound pitchy. This is when you say, you know what? I'm actually a multifamily real estate investor and I buy property pretty much all over the United States. And you are not going to believe how I fund all my deals. Just guess. And they're going to say, how? They asked me. At this point. I probed the question and now they're asking me how. And when they say how, I say, you know what? I help people who have money sitting in the bank collecting dust by allowing them to invest in my deals. They get to sit back and relax and earn 10 to 15% annualized returns. And my team, we do all the heavy lifting. And so it's really a great opportunity that puts everybody in a win-win situation. So I kind of just read that off of here, but that's basically how I do it. It's very authentic. I start in and I ask them what they do. They ask me what I do. I tell them and I ask them, guess how I fund my deals, because it's really extraordinary. Because most people think that you've got to have a bunch of money on your own, or you've got to have like this conventional loan. So when I'm asking them, guess how I'm funding it, like I really want them to guess, because I know they're not going to guess, because this is extraordinary. And so when I tell them, like, yeah, just regular people like you who've got money sitting in the account, and you guys see the wording that I put on here. I help people who have money sitting in their bank by collecting dust, by allowing them to invest in my deals. Allowing. Remember when I said in the beginning, there's a difference between saying asking, I'm asking, and I'm allowing. I am allowing you to invest in my deals. It puts me in a different position of authority. And so when you say that and you go on to say, yeah, it's a really great thing because it allows all of us to kind of be in a win-win situation. After that, you let the conversation go where it needs to go. Don't try to push it no further. Actually, after that, I want you to say, but you know what? Remind me what you did again. Get it off of you, because then they're going to come back to you and say, okay, wait, hold on, wait. You said you allow people to what? They can invest with you and get what kind of return? Okay, tell me a little bit more about that. And then now you can start to elaborate, but that's how you're going to start the conversation.
Okay.
Does that clear things up a bit about how you guys should approach? And does that give you a little bit more confidence when you are approaching these people?
Yes.
Yeah.
Okay, good. Make it simple. You're not pitching them. Do not make it sound like a sales pitch. If it sounds like a sales pitch, it's gonna sound like a sales pitch to them. Make it conversational. Maybe you use what I said, or maybe you put your own little thing in there, but customize it. Make it your own to where it sounds like you. This sounds like me. You know, when I ask people, you're not going to believe how I fund my deals. Like, you're just not going to believe it. That's honestly how I talk. That's the way that, so put your spin on it. And then lastly, you want to be following up with these people, right? You want to be building an authentic relationship. And so you want to nurture this relationship. You want to make sure that by the time you have a deal that you need funding for, that you guys have already built this kind of trust relationship to where they're like, oh, I know Crystal. Yeah. Like, you know, like, yeah, she's really cool. Like, she's got her husband and her baby, and they're so sweet and all this stuff. So now they feel like they know you. And if they feel like they know you and they can trust you, then they'll give you their money.
Right.
Okay. What was that? Oh,
I'm sorry, Lisa. My iPad is going dead. I gotta get a charger, so I'll be right back.
Okay, no worries. And I actually think you guys, this is about I think that's about it. Hold on. Why does it keep doing that? So anyways, what questions do you guys have? I'm gonna give about 5 minutes for you guys to ask any questions that you have before I take off for the rest of the day.
So out of all the advice that you gave us, where would you, if you could go back in time, where would you go first to meet someone? Where would you think would be the easiest?
So, and I get asked this question a lot of the time. People ask me, Tilisa, where do you find private money lenders the most? And honestly, and you might be disappointed in this answer, but there is no one place where I've just got like a slew of private money lenders. It has literally been, I got a private money lender from a plane. I got 4 private money lenders from a conference. I got a private money lender while I was downtown dancing. I got one while I was at the gym. I got one while I was at the grocery store. So it's like, there is no one special way that works. People reach out to me on social media. So I do everything. I literally tried everything, and I had to see what works. So if you're not able to get out there, you know, you've got your baby and whatnot, you're not able to get out there and attend real estate meetups, then my advice to you is going to be, go to Bigger Pockets, go to their website, go to their events, and find events, webinar events, online events that have 50, 80, 100 people that are going to be attending, and it will show you who's going to be in attendance. Right. And then you join those. And when they ask people to introduce themselves, whatever, that's your chance to shine. Hi, my name is Crystal. I live in Pennsylvania. Me and my husband, we raise capital for our real estate projects. Who cares if you don't have a deal? Say it, because you are going to be raising money for your real estate projects, right? So you do that if you can't get in person to some of these events. Social media is another big thing. I see a lot of you guys, and I did go to some of you guys' social medias before I came here just to see how active you guys were. Tiffany, you do a really great job at putting your stuff out there that you're doing in your real estate business, but we need to be putting that stuff out on our pages. The first thing that a lender is going to do is they're going to go to your social media. She says that she's this, let me go to her social media. And now they're scrolling and they're like, I don't see any real estate stuff. I don't see anything about they raise money, or it's just flowers and butterflies. And yeah, I'm not really too sure about this person. So if you want to use social media as a tool to get private money lenders, then you need to be able to attract private money lenders by the content that you put on there. You guys have all seen my content. I'm attracting private money lenders. I'm attracting people who want to learn how to raise private money. I'm attracting investors who need their deals lended on. So I'm very intentional about the content that I put out there because I want a certain result. So as of now, we should not be posting on social media just to be posting because the picture is cute. Those days are done, honey.
Right.
That's done. If it's a cute picture, cool, it's cute, but say something at the end like join my webinar next month or something. It needs to have, there needs to be a call of action. There can't just be a post, right? We need to use our social medias as a tool to get more coins in the bank account. That's all it's there for. Okay.
Yeah, I'm gonna be deleting some of my old pictures, and I'm gonna be like, you could put family pictures, but what I'm doing now is I'm putting like like yesterday when I met with you, I put that on there. I saw some people, they liked it, some of my family members on Facebook too. So I'm trying to do that. I have to update my website because the website has only wholesale stuff, but I want to kind of look at some of the websites that you have and other people that are raising private money, and I want to kind of not copy it, but use my own words. Copy it, but use my own words.
There's nothing wrong with that, girl. Ain't no point in recreating the wheel. And I'll tell you right now, my website is not even up. Right now, everybody has like individual landing pages for all my stuff. So my assistants are currently working on building a robust website to where people can go on and do everything. So be on the lookout for that. But girl, yes, as soon as it's out there, look, copy it. I don't care. Like, and there's no point in recreating the wheel.
I have one more question. Where do you think is the best place to find an assistant? Because I found an assistant in the Philippines, but we're having some problems with communication. So is there like, I'm a very like hands-on person. Is there somebody I can find? Maybe I can pay them, when they find a deal, like, okay, they found a deal, so I can give them some of the money, pay them that way.
So, okay. So when you're talking about a VA, no, because a VA is going to want to be paid on a weekly basis. I pay my VAs on a weekly basis, and I do not have my VAs make any phone calls. They literally just do administrative work. This presentation, they put this together. My funding proposals, they put like all the little stuff that I need done that I don't have time to do. That's what I use my VAs for.
Okay.
But what I will say though is, now that you know how to raise private money, you bring an additional value. So you can now reach out to other investors through any of these Facebook groups and say, hey, I'm looking to partner with somebody who doesn't mind calling leads in exchange for 30% of my wholesale fees or something. You're going to have a slew of people commenting in the comments saying, hey, I'm interested. Hey, I'm interested. I don't mind. And then once you have all those people who are interested, then at that point, you get their numbers and you schedule interviews with them. And you interview with each of them individually, 20, 30 minutes, get to know them, find out what they're about. You're going to know if they know this business or if they're hungry enough to be able to be working with you by just the conversation. Listen to your intuition. But that way you can have somebody working with you who's not looking for you to pay them weekly or monthly or whatever. They know that you get paid when you close a deal.
Right, right.
Okay.
Yeah.
Yeah. So it can be very simple. It's all the way that we think about it. Anytime you think of, I can't do this, or, yeah, I can't, you need to say, how can I? How can I? There's always a way that you can do it. It's just how can I? So anyhow, you guys, that wraps up our workshop today. I hope that this was valuable. I hope that you guys learned something new. And I wish y'all all the best.
Thank you. It was so nice to meet all of you.
Before we go, can I share my opportunity?
Oh,
Or-
yes, Tiffany,
Yes.
please.
Okay. So I went to see this property yesterday in Fort Worth. It is a 3-bedroom, 2-bath home, 2,500 square feet in a really nice neighborhood. The current owner is wanting to get rid of all of his properties because he's trying to build a property in Lake Whitney, like on the lake, whatever. He bought like 14 acres, right?
Okay.
So he have tenants in there already, but he already said that the rent is below market value. So I went and did my homework. The ARV of the property is between 370 and 380.
Mm-hmm.
No repairs are needed. Like the family that lives in it, when I tell you I walked in, the house is clean. You can literally eat off the floor in there.
Wow.
And the owner really wants this family to stay in there because so it's a mom, a brother, and a daughter. Well, the mom is disabled, so the daughter is paid by the state to take care of her. So they paid the rent with that money. And so the tenants know like the rent is gonna go up, right? Because he's selling it. He got the property at a lower amount, and I'll just tell you, they're paying $1,800 in rent.
Okay.
And so he's already telling them that the rent is gonna go up. Now he is asking $305 for this property.
And ARV is 380.
Yes.
Okay. Okay.
So
Keep going.
so my question, when you're looking at a property, and it doesn't need any repairs and the tenants are wanting to stay there. Like I said, this is a buy and hold opportunity. And the tenants are wanting to stay there, no repairs, and they know that the rent is going to go up. Do I stick to the 70-cent deal? Because when I researched when I did my math at 380 at 80% of the ARV, that came up to like, I think right at 300,000, pretty much. I think the asking price.
Okay. So a couple of things that I want to mention here. And you guys can take this with a grain of salt because I know every investor and every guru is going to be different. And I am not a guru, nor do I call myself one. So a few things. I know that if you're going to do a fix and flip, that ARV means a lot. Why? Because you need to make sure that you can sell that property at that ARV. And you got to make sure that if you're buying it at 300,000 and you're selling it at 385, that you have enough money to renovate it and all that other stuff and closing costs. But that's not your deal because this is not a fix and flip. This is a buy and hold. So with a buy and hold, I typically tend to look at it a little differently. I do look at the ARV, but that's not the main factor that drives my decision with the buy and hold. What's going to drive my decision with the buy and hold is cash flow. Okay. So I'm gonna ask you a couple of questions. We already know that the rent is they're currently paying $1,800 a month. Okay.
Right.
What will you're gonna purchase this property using private money, you're thinking?
I was thinking private money, but I would have to find a private money. I would need to know how to pitch it to a private money lender. And then the backup would be hard money lender. But I really want a private money lender.
Okay. So what I would advise, because this is the thing, okay? If you bought this property at he said 308.
Yes.
Okay. If you bought this property at 308, let's say on the low end, you were going to bring a private money lender in with a debt position. So you're going to be paying them monthly interest payments, right?
Right.
So
Mhm.
at 308 times that 12%, that gives me $36,960 a year. If I divide that by 12, that means that my monthly payment to my private money lender is going to be $3,000 a month. You're only bringing in $1,800 a month. Even if you increase rents to $2,000 a month, you're still in the negative because
Yeah.
you haven't put any money aside. These dogs, you haven't put any money aside for capital expenditures, which
Mhm.
I typically like to set aside 5% of the rents. For maintenance and repairs, I typically like to set aside another 5% for that. And then 10% I like to set aside for property management. So those are 3 additional expenses that people typically don't include when they're looking at what their monthly cash flow is going to be. So with just what you have to pay your private money lender, not even including anything else, you're already going to be in the negative. So in this situation, what you would have to do is you would have to come in with like a DSCR loan, right? You'd have to come in with a DSCR loan. But the thing is, with the DSCR loan, the rents collected has to be, oh goodness, what am I trying to say? Basically, the amount of money that it's bringing in has to be able to cover your DSCR loan, right? Okay, so they're going to base how much they fund you based on how much that property brings in. So if it's a $300,000 home, they may fund 80%, they may fund 70%. You really don't know. So, but if you were to do that, then you may have to raise 20% of that from a private money lender, and then plus closing costs and whatnot. So in this situation, that would be my preference, because if I only have to raise 20% of that 309, that means I only have to raise $61,000. And so in addition to that $61,000, I'm also going to include my closing costs, which is going to be 6% of the purchase price. So 6% of that, that's $18,480. So what did I say the first number was? 61,000?
61,000.
Okay. So 61,000. That's already about 79, 80,000 right there. And we have not set money aside for reserves. So let's say we want about $10,000 to put for reserves. So let's say you would need to raise about $89,480. So if you wanted to raise that amount, let's go ahead and see what that looks like at 12%. So times 12%, that's $10,737 for the year. We're going to divide that by 12. And your monthly payment to your private money lender is $894. That sounds a lot better. That's the route that I would go, because then I know that, okay, if the rent's $1,800, I got to pay my private money lender $900 a month, you know, but then you also have to figure, what is my loan payment going to be on that DSCR loan?
That's what I was about to say. You got to make sure that you check the rents in the area to see that if you can actually get that, because I can tell you right now, I'm a numbers person. So buying it at 305,000 or whatever he's trying to sell it at, and the rates that they're offering for DSCR loans, you're already over that. Like you're not cash flowing nothing. That's not even considering the amount that you have to pay your private money lender to cover that cost. So it's not a deal.
It's not a deal.
Is not a deal at all if you're buying traditionally. Like maybe if you structure a creative deal, I don't know if they own the property outright, then maybe that may make more sense, where you're not having to come to the table with a lot of money, a lot of fees, but you got to make sure that you can get the rents in the area. I know he wants the person who's living there to stay in there, but if it doesn't cover the cost, it doesn't make sense, and it is not.
Right. I was just like, well, me personally, I was like, I've been puzzling my brain over it, and I was like, I don't think it's a deal. I don't think it's a deal. And I was like, but I wanted to, like, since I'm on here, I put it out here put it out here to you guys and just to kind of get your feedback on it. But yeah, I don't think so.
I'm glad that you asked us. I'm glad that you asked us because a lot of the times if a seller is willing to sell to us and it seems like, it's promising, we will kind of not really ignore, but we won't really take into account that the numbers for this deal really would not work for me, but the seller's willing and the seller's being nice and the seller's willing to be accommodating. So it seems like, man, I could possibly make this work, like, because the seller's cool. Regardless of the seller's cool, these numbers over here, they're not working. So
not working.
Cool, but this is just not a deal for me.
Mm-hmm.
So yeah, and that's another reason why I love buying creatively, you guys, because that right there, the money that I have to raise from my private money lenders is minuscule. And when I'm buying these multifamily properties where I'm bringing in $6,000 a month, $5,000 a month, and I only needed to raise $100,000, oh, that's simple,
Right.
right?
That makes sense.
That's lovely.
Mm-hmm.
Yeah. So find your niche, find the deals that make you feel good, right?
Yeah.
Once you find the deals that make you feel good, micro focus on those deals. Fix and flips didn't make me feel good. Why? Because I'm not good at estimating cost of rehab. My friend Deborah can go inside of a building and she's like, oh, they need to do the exhaust, and she talking about I don't know what you're talking about. She knows all that. The fascias, girl.
Mm-hmm.
I am a numbers woman. I am an accountant by nature. Give me something creative that deals with numbers, and I'm going to love that deal far more than something where I've got to actually be creative. So, and the other aspect, right? So anyways, find the deals that align with you. If there's any deals that give you anxiety, or it just kind of gives you those questions of like, it sounds like it could work, but then I just don't know about this part. This is the part that really kind of gets me. Even after you learn that part, if you still don't feel comfortable, move on to a different exit.
Yeah.
Okay. All right.
Thank
I would
you.
love to stay here with y'all all day, but my husband and my kids, they want to go to the King Spa.
Nice.
Just send us the link to the Facebook group.
Yes.
Yes. I'm gonna send you matter of fact, let me make my to-do list. I'm sending you guys a link to the Facebook group. I'm sending you guys information on how my friend Deborah Douglas was able to close with a private money lender, even though she had a hard money loan. And then what else was I sending y'all? Was it just those two? I think it was.
The promissory note.
Oh, yes. And then the promissory note. Yes, and the promissory note. So yes, I will send all of that out to you guys before I go to the spa, because I don't know if it'll happen after. So I'll do that.
You good. Go enjoy your day. You good.
Yeah.
Oh, y'all are so sweet. Thank you guys for joining today. I really enjoyed having y'all. Y'all probably I'm not even gonna say this, but y'all were my better group than yesterday. I just like the energy. Y'all just have all the energy. So thank you so much. Be on the lookout as I have other learning opportunities, you guys, and feel free to reach out. Y'all know I'm a friendly face. I'm just like y'all. I'm just regular girl, just like y'all. So thank you. I appreciate you.
Thank you. We appreciate you.
All right. Thank you.
Thank you so much.
Bye, guys.